Good morning. August 1st. We made it. We're going to be streaming stocks, options, futures trading today, all day during the market, watching technical analysis, looking at various tickers, whatever comes our way. SPY 4, SPY options, and ES futures, and then BBBYQ, GME. It's like we have Nicola's up on some news. TUP is still short squeezing. We'll watch it all. Sub up, like up, comment down. Happy Money sticks around. We have a Twitter you can follow us on at Happy Money YT, as well as a Discord server. Link for both of those are in the description. I'll pin the Discord link in chat as well. Maybe I should call this X. I don't know. No official announcement. Just changed the name. I don't know. I'm not gonna do anything yet. Not anything too rash. I'm still sick, so pardon my coughing at times. I try and mute, and I do mute for the bad ones, the ones that'll clip your mic, clip the audio. But I feel fine, so it's no problem. Just a bit of a phlegm cough. I don't think any of our, I haven't really checked, I guess, but Tupware's up. MSGM, GMBL, some of the gaming, esports gaming stocks are up for some reason. Nicola's up because of reading about it. What was it? Tupware's big win in hydrogen station regulatory grant funding, additional 16.3 million for a total of 58.2 million in the last 30 days. And they also got a 13 truck order from JB Hunt, a trucking company that has not gone bankrupt yet. There you go. And with that pump in liquidity, they also get a huge pump in market cap. So bravo. SPY kind of sold off coming into the pre-market. Down 0.35, actually lower than yesterday. But rally into close yesterday was pretty epic. So we'll see. We'll see here if I have a few different things setting up. Need a break out of range here to see which way we're going. If I were to guess the direction, it would be down, just because that engulfing candle. The volume that day, bearish MACD, but don't have any bias, so don't know yet. It's like GME's down 0.5%. Go through. We have on here. Chipotle's down 0.3. Eggs down 3.4. Rad is not trading. Still looking for some rad leaps. Zoom is down 0.5%. Need some price action on Zoom. Teladoc's down 1.5. Might average into those calls on Teladoc. Get some more today. Birds was up 7% yesterday. My calls on Birds though are just worthless now. I don't know. It's pretty jacked up because they're non-standard deliverable. they call them, because they were before the reverse split. So yeah, there's nothing I can do with them. It's like shares that can't be traded. So that kind of sucks. I lost a lot on birds. Looking back, lost a whole ton on birds. First Solar's down 0.7. Got Dish down 0.5%. Looking for some more Dish leaps, I think. No, I think I've got what I want for now. Funko's down 1.35. Days for earnings on that. Fisker's down 1%. Toby's down 1.9. Lucid's down 1.8. Rivian's down 2. Let's see, we looked at Dish. Boss, Green, 0.72. And Mullen's down 1.7. Thinking about getting some more Mullen. We can hold this support on this inverse head and shoulders. I like that. And GME's down 0.5%. My E-Trade says barbecue's up 3% pre-market. Really don't have any idea though. Party City still, yeah, I was up like 160% yesterday on this one trade. 1,000 shares. TUP 21% pre-market. Yippee. I'll just get rid of that because this thing's never retraced. I think it, well, I don't know. Maybe it won't this week. That 517 is going to open at, so above that resistance. I've got 556. Our next resistance. Seems like closer to the end of the week there should be some profit taking on this one. Maybe mixed in with a share offering. Assuming they'd like to do that at some point with this rally. Okay. Good morning, Mo Lava. Got a good evening. You are first to comment. Well done. Morning, Archer. How did the owls sleep last night? Morning, Pick 6. Anything about the stock market being fake and running on an algo cycle? Yeah. Yeah, I think that. I mean, that's a very generic and broad description. But yeah. It is run by algos for sure. Fake? Yeah, I mean, it's to an extent it's fake for sure. If you don't have price discovery, it's fake. Natural price discovery. And I don't think we do. OTC maybe does to some extent. More than the NASDAQ and New York Stock Exchange. But yeah. But maybe it's not widespread. I've been my judgment's maybe been clouded from following GME so closely the last couple years, and maybe there's stocks out there that do have more natural price discovery. I don't think so though, because they're all run by derivatives and they're run by high frequency trading and market makers hedging. So, and then all the different layers that you go through. There really is, it's not even that possible to have price discovery. But there's probably stocks that aren't quite as manipulated, whereas it's not, they try and emulate price discovery that's natural through all the different layers that it goes through that affects the price. And I think actually GameStop maybe has flipped into that category. Once it got fixed. Now it just looks like a value stock, dividend stock that trades. No, your orders don't go to Lit Exchange. But good morning. Had about a minute and a half to open. Got 20% on Tupperware pre-market. Same with Nikola. Good morning, Tasty. So on barbecue, I'm looking for a break of basically this trend line or this one. So expect us to ping pong around in there potentially. And there we're open. SPY's opening up, down 0.32%. Barbecue, it's up 2%. And down and up. So yeah, pretty much flat on the open. %3 on barbecue. Tupperware 21%. Oh shoot, I forgot about my calls. I should have checked. Well, I got some more Zim calls. Ah, should have checked those. Got a way better fill. Oh well. Let's see, what do we get? That actually happened last time with the Zim calls and it ended up working out good, so. Sorry, that is me. Got 17.5 September calls on Zim. Wouldn't recommend opening up options in the morning, the first 30 minutes. Unless you think it's going to run and not stop that day. But I just did, on accident. Maybe it'll just bounce and rip and it'll be a great entry. They have earnings also, so hopefully we get some profit before earnings. Dish is down 2%. Let's see. Got Teladoc down 3%. See if we can get another dip buy here on Teladoc. Get some more September calls. Wonder if that's enough time. Eyes rallying up there a bit. I've got calls for Rad that are open. Yeah, Nikola. Oh, selling off a bit. Profit takers. Those buggers. What's up, Fumin? The barbecue had a little 28.99 it hit. Okay. Let's see what it brings us. Wish is halted. Is that a news halt? Why are you halted, Wish? I don't know why that's halted. Strange. Upwards coming down a bit as well. How are those Zim calls up? Oh, it's just the spread. Early morning spread. Got some stuff I need to get out of. Need some action here on egg. There's the SPY rallying up a bit. Forgot anything on Rad. Need more time. Express is up 6%. Wish is still halted. SPY's rallying here. The cost is up 1.5. Mullen's down 2.5. You better hold that level, Mullen. Don't make me do this again. Eyes rallying here. Oh, when to buy, Nicola? Never. Kid. Whenever you want, man. Depends on your plan, your trade. You gonna scalp it? You gonna swing it? You gonna day trade it? You gonna invest in it for the long term? They have earnings coming up, so good risk management would tell you to wait until after 8-4. Sorry, I just thought you wanted me to look at it. I didn't see that you said when to buy. .7% on barbecue. Mullen's down 3.25. Possible could find this as support, but I'd throw out that inverse head and shoulders. Aloha, Maui. ETOO is still going. This thing was ripping yesterday. Yeah, it's up 6%. Wish is still halted. Like Tupperware is recovering a little bit. Barbecue's at 2%. Like to see Zim fill that gap before earnings. That's my earnings wish for you, Zim. Fish is down 2. Excuse me. Looks like Teledoc's bouncing a little bit there. That 30. Wait. 23.6. Let it settle down and look to see to get more calls. I think what sucked about yesterday's my averaged up so much. I'm like break even on it now. But I guess that's fine. It's kind of confirmed the breakout and the bull flag. Everything we want to see. GME's down 1%. Wish is still halted. Barbecue is flat now. There, TUP is popping up. Reaching for the pre-market high. Same with Nikola. DTOO up 10%. Not seeing any news on Wish. Realized run rate savings of 43 million, 46 on an annualized basis starting in Q4 of 2023 includes about 160 in the United States. That's not it. All these Z tickers. I coughed up the biggest like loogie chunk this morning. It was insane. Just like built up from overnight, just breathing and not hacking anything up. I should have taken a picture of it. So stupid. That would have been great. It was like blubber on my hand. Showed it to my wife. Let's see if SPY wants to test the pre-market low here. Let's scalp some Nikola together. This isn't a team sport, man. But yeah, I mean, I'm not gonna use a day trade on Nikola. You could look for a retest. If it comes down this far, Q8. Looks like it's gonna be I mean, it could still happen this morning, but you might not get a rally till later. And just profit taking so far. I'll probably wait for some momentum on something like this, though. It could just come down. So some sort of breaking of resistance levels. Some sort of bottoming, you know. Like that. TMI. Nice little gross morning story. Get your stomach right for the day. Caterpillar, they have earnings up 5%. Mm-hmm. Oh, nice. Mullen bounced on that level. That is neat. What I wanted to see. Barbecue plus 1.8. GME's down 2%. Press is up 6%. We've got the casino stocks rallying. One of them probably had earnings. Down today. BBBYQ is down another 14%. Stupid I didn't just short that. I have to be more decisive with shorts. It's just pretty foreign to me, so like shorting shares is not like a reactionary thing. And OTC also. Like I should know. OTC, it's gonna go down. Would have been a pretty easy short. Regions down 12? In the world? Is this on earnings? Yep. Travel. Looks like travel earnings are bad. Travel and leisure. Coins down 6. Teladoc's now down 5. Come on, Telly. Oi, Telly. Excuse me. We get some IV on the options on Teladoc yet? Still pretty low. So nice for opening. Went long on them. SoFi's down 5. Not enough. Nerd's Wallet down 5. They have earnings tomorrow. Lyft's down 4. I'll put some stop losses on these things. Cost. Mullen. Dish. Fubo's down 3.8. All these earnings coming up. Neo breakout was nice. That gas is down. Uber's down. Overstock. Peloton down 3%. Mia. 2.8 on Jamia. GME down 2. Big Lots down 2. Barbecues up 2.8. And that barbecode. Boss is now flat. We've got a court hearing today for barbecue, don't we? Nicola's holding up that 19%. Top War is holding up pretty well. Also, Proterra is ripping 15% on that one. That's a nice breakout level too. Yeah, that's a great looking chart. This is one I'd be scalping, day trading. Or looking for one. Maybe swinging. Yeah, I might look for a position on a pullback. We have options. Like to see a pullback support on that $1.83 level. If it would be so kind. Just so conveniently happens to be at VWAP. SNMP. Is this halted? The heck? This has been halted for a long time. What happened here? Hasn't traded since oh, that's yesterday, never mind. What? Is that a 2400% move? What is going on? Went from 35 cents yesterday to $14. How small is this float? 192,000 shares. I'm gonna trade that. Proterra. Ease up. Ease up. Yeah, I mean, the upside on this one looks very nice. 2-4. That gap fill, maybe even up to 3.5. Just slow down, man. Okay. We have manufacturing PMI at 10, as well as job openings. Sorry, manufacturing was 945. Job openings, ISM, and construction are all at 10. So we'll see if we get a little volatility on the market. Right then. Even $2 is a nice resistance. Oh, this is up a little bit. I gotta figure out what I want to cut out. Maybe Mullen. Don't like Mullen. Maybe Dish, actually. I have enough exposure on the other account. Still like my cost trade. I guess it's pretty early still. I think it might just keep running for a while. No, I don't like that entry at all. SNMP, forever halt. All right, there's your data. Eyes rallying on it. Big rip rally. Terra's still going. I don't know if we'll get a pullback to VWAP before an entry. S&P resumed, up 44%, soon to be halted. MGAM's up 19%. Wow, that after hours move. What are you doing, MGM? There's no excuses, Guts. I don't care what kind of ridiculous household traffic you're running into. Legos and teddy bears. Rocking horses. Go Proterra. Nice. Fine, just chopping around here. Price is up 7. Yeah, I closed out of some dish shares. I'll have enough exposure on my other account with options. Thinking about options actually with Proterra, not shares. No, the IV's high though. Yeah, I don't like that spread. Just widened way up. Velodox down 5. Barbecue up 2%. Picking up some Proterra here. I'll get some more at VWAP. If it comes down to 183, I'll get some more there too. Someone says stalking horses, teddy bears, and Brickbuster Legos? What? Investigated on a proposed acquisition. Oh. Not too bad of a reaction so far. 2%. Yep, fingers up 1.5. I'm not sure, Granite. When's the hearing today? Is it this morning? Is it at 2? Buys coming down. See if you get a retest of these lows. Micro mobility is up 15. Party City's down 67. And BBIG looks like the OTC that it is. Coinbase down 9 almost. Wow. Alright, there's the low of the day on SPY. Looking for a bounce to short it. Oh. It might just cruise down to yesterday's lows. Or no, never mind, the 28th. Actually past yesterday's lows. Mullen's still holding that level. MNK is up 11. There's Proterra. Okay, broke through VWAP. See if we bounce on the breakout level. $230. Thanks, Wayne. To Ferg. I don't have any info on IXL Therapeutics. Never heard of it. A bit of a bounce on the SPY. Terra moved back up to VWAP. A little more Proterra here. Flushing down. Whoa. Reaching for that 455. I don't even know what's the ticker. I'm gonna give you TA on it. Ah, Tupperware bounced back up there. Love VWAP now. Barbecue 1.3%. GME down 2. Proterra kind of bounced on VWAP as well. Mullins holding up that level. Morning, David. Went from telling me to take a look to now bumping it. Telling me to day trade it. What in the world? I feel like it was all a setup. Spy looks like it's setting up a bear flag down here. Got one more support and then gap fill. I'm looking for a little bit more of a bounce. I keep popping in and out and getting chopped around. I'll bounce up to here at least. There we go. Tupperware's halted. What? Holy rip-a-moly. Came out of nowhere. Thing's gonna actually maybe start squeezing. Like it's kind of been squeezing, but not like crazy velocity. And we haven't seen it. I don't think we've seen it halt at all during this rally. It does have a tiny float, 38 million. And yet 173 million traded yesterday. Today's already traded more than the float. Wow. Alright, SPY's rallying back up there. TUP is still halted. MNK at 9%. Hitting yesterday's high. Not quite, actually. That line from yesterday, though, 1.9. Yeah, no, TUP's halted. It's crazy. I wonder if this thing actually starts squeezing. There, it's resumed, like with some velocity. Not this slow grind up it's been doing. The kind of squeeze that FOMO just boils in people until they can't help but buy it. Retesting that breakout level. I think it's filling gap up here, right? Not quite. Almost there. 57. 57.7 is that high. You've got a gap fill. Popped up to the next resistance pretty quickly. Was it just yesterday it was fighting this resistance? Now it's already up to that one. Wow, wow, wee, wow. You got some daily puts on the SPY. One trade today, I am in a 455 puts. TUP kind of getting shut down there. It's weird. Terra's holding up pretty well. Couple of bounces on VWAP. Mullen holding there well is also. Markets retracing pretty far up here. Sorry, guys. MSGM is halted. Look at that. GameStop dead? I think it's been fixed. So, I'm treating it as a value stock. So if by dead, no more cycles and pinches and crazy volatility, seems to be. If that's what you're referring to. And barbecue coming down a little bit. That's 2 alts now on our watch list. That's interesting. Pac West, just still like tight consolidation. Oh, let's come down more. 3.7 does have that gap down there. We've got a head and shoulders here on the hourly. Got a gap to fill down there to 8.9. You had that engulfing candle, like everything, like a lot of stuff with all that volume. So yeah, mostly bearish, but you're in a very tight range. You know, you've got like support and resistance right here. Looks like it probably wants to come down and start testing some of these levels though. 7.5 like it hit the other day. Maybe 680. Down here, this low. MACD's flipping bearish today if this holds. Got right into the 9. That was weird, that halt on Tupperware. Like, there's no follow through. Just ripped up, halted, and now it's just back to trading normal. Or if there was some news that dropped. I just danced around here. Very inconclusive. Oh, and there's your conclusion. Back to VWAP. No, I probably should have stopped out of those puts. Just sucks only be able to do one. Never want to stop out. Proterra popping up again. But where's rallying a little bit? Let's see. Misjam's still halted. MGAM's ripping up. Yeah, these mobile esports tickers are doing crazy stuff. There we go. Just a little stop hunt there on the SPY. If it hits every by a boatload. Yeah. Yeah, I think you might get it. Especially if the market starts to turn around here. I think you could easily get to 7. BBBYQ get back on the Nasdaq? It doesn't seem very likely. They didn't seem to have any desire to even be on there with all their missed filings and just breaking all the rules. Morning Kyle Fox, morning Rock Solid. Yeah, TUP broke out of that high. It halted earlier, which was strange. Actually waiting for that miracle. Good. It would be a miracle. Good you can see it that way. Totally says TUP is delinquent? What? What do you mean? Miss Jam still halted. Proterra. I didn't want to cut out a cost or Mullen. So I didn't put that much into Proterra. But I do like that chart a lot. Mullen just needs to hold this support. Cost is just in a nice uptrend. It doesn't define it for me. That's good. People are wanting it to soar again. Your desires mean nothing. They have earnings. See what happens with that, I guess. It is actually kind of in a breakout. Excuse me. There's a nice breakout level there. Going up on resistance and into earnings. ACB bumper failed. GME? Why, Ruthless? Why do you say that? 40% on MGAM. That was weird. Tupperware halted and then it just kind of filled out. Very strange. Proterra reaching back for those highs. Looking for SPY to come down. 455. And maybe a gap fill to be oh so kind to these puts. $42% on an MGAM. Tupperware above that level. Start putting some more resistances up here. $640. And just that gap fill, I'd say. Next zone's up. The trajectory got steeper yesterday. Barbecue down 0.5%. Ping pong between my ranges there. Buys moving up here. I'm cutting my puts. Cut, you're cut. Just trading the futures on it. Dang. Yeah, some barbecue consolidation. The hell's ripping? Yeah, it is 56%. Now, why does this one go into bankruptcy rip? The short's closing? This is the move we never got on barbecue before OTC and bankruptcy. This is what I was expecting. It never came. Maybe that's a good sign. Maybe that means barbecue will still happen. Oh, you're saying it's dead as far as GME. Yeah. No, I see it. I see it coming down. This was the level I wanted to hold to be bullish and breaking this level, making that cup and handle, but it broke out to the downside, so that's what that arrow's for. I think this would be your first line of support, which probably land around 20 bucks, and if that breaks, 18 and then 15 and then 10 after that. But I don't have a position. I almost opened up one yesterday, but I'm like, dude, the options on GME suck. They really do. Oh, Yell does? I think Yell has assets to give to people. Proterra hanging out at the highs again. Mullen still finding that support there. Little inverse head and shoulders. I'm not going to have a long leash with Mullen this time. There's SPY reaching back for VWAP. MSGM still halted. Proterra looks like it wants to break out again. Tupperware also holding above that resistance. Blue Apron's up 6. Little pre-earnings run up maybe. It's been a while on Blue Apron. Yeah, Teladoc, I picked up one more yesterday, just in case it kept going. But yeah, is that 38.2% or so? Yeah, if you get it starting reverse on the micro, might be nice. Nice little pickup. talk about getting sued? Much larger than in life? Oh my gosh. It's about anything in this country. I've heard it was at 2:30, so got a few hours. Bubba and Tilray, I'm assuming. You still hyped on the weed play? Yeah. Did break out of that level. You do have a bit of a cup there. For some retracement for a handle. MSGM is still halted. Wonder if that's from news. Tupperware is up 33%. Wow. Oh, actually LTRY. Thought you just spelled it wrong. Lottery com, huh? Actual lottery stock. At least they're saying it like it is. The lottery. Interesting. Coming down on that BWAP test. Barbecue 2.17% green. Putting a stop on Mullen. You won't get me this time, Mullen. Terra double topped there. Coming back down to VWAP. Mine's also moving down. $1 billion jackpot tonight. Free lottery tickets would be kind of cool. At least I'm getting something. With the IK99 story? I haven't heard about it. MSGM halted down now? No. How much you need to put on a 0-day trade to make $1 billion? $18? for the jackpot.
Percent this month, the biggest increase since January of 2022. For a look at some of the top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on the TD Ameritrade Network. To start off with Uber, which is the winner. Tell us a little bit about the report and what jumps out at you, Jenny.
Right, Nicole, I think the focus here was the fact that this company was finally profitable for the first time in their second quarter, which they highlighted over and over again on their earnings call, earning adjusted earnings of around 2 cents per share, which was better than the loss of 1 cent per share the street had been expecting here. So that seemed to be the focus, although things have been a little bit all over the place pre-market and now since we've opened here today. But all in all, really solid report out of Uber. They reported revenue growth of 14% year over year, did slightly miss consensus, but I mean, just barely, coming in around to $9.2 billion. Revenue from their mobility segment rose 38% year over year. Delivery was up 14%. Freight came in as the weakest spot, down about 23% from a year ago, while gross bookings overall rose 16% year over year, offsetting that freight gross bookings they saw, which declined actually 30% from a year ago. Trips, though, rose 22% to 2.3 billion or 25 million per day. Their monthly active platform consumers reached 137 million. That was also up 12% from a year ago. And on this earnings call, the CEO highlighted the fact that driver and courier engagement has never been stronger, with 6 million drivers and couriers earning a record 15 billion during the quarter. They do also now expect their third quarter gross bookings to fall between 34 and 35 billion on adjusted EBITDA of around 9 million to just over 1 billion. So guidance still looked strong, and we saw shares surge pretty significantly pre-market this morning and then fall, now down about 6%. But I just think the market isn't giving enough, I guess, justification to some of these strong numbers we got. The fact that this name has continued to be able to grow so strongly every quarter of this year, and now with this GAAP operating profit, it just seems like this wasn't enough to please streets. Shares did touch 52-week highs yesterday, so perhaps just priced too much to perfection here, Nicole.
Oh, you know, I saw it moving higher, and now it pulled back. And so, you know, there was some excitement surrounding this name over the last week or so because it had been running up. Over 1 month, it's up 8%. But you know what I did think, before we get to the cruise lines, I saw that now you're going to be able to see what rating you got from the driver. You don't know which driver, but you will know how many 5 stars you received or how many 1 stars.
Yeah.
Yeah, so I can't wait to look to see how many rides I had and what my percentage is of 5 stars. I hope I got. New York's a tough place, so I don't know. Let's see how many I got. In the meantime, cruise lines. Let's take a look at Norwegian Cruise. You have some news on that.
Yeah, this one definitely not a winner today. I was watching the same thing because I was watching Uber earlier higher, and then since the story has completely changed. But this name has held pretty steady to the downside all day long, and that's just on all things weak guidance, as they unexpectedly do not expect to report a profit now in their third quarter, which was read obviously pretty negatively by the street. We did see they did hike their full year earnings guidance by 5 cents to 80 cents per share. Wasn't enough, though, as they did report their adjusted earnings that also came in better than expected. Sales were better than expected. The bar was just so high for this name. They did say that now for the third quarter, which is typically the best 3 months of the year for cruise operators, this did fall short of even their prior expectations, and as a result, shares are getting punished today. Now, they do expect to earn earnings of around 70 cents per share in the third quarter, about 10 cents below expectations, but this was a name that had ran up over 80% on the year into today's numbers, actually underperforming Royal Caribbean and Carnival, which are both up over 120% on the year into today's open. So it's just been amazing to watch some of these cruise liners. You'd think that with Norwegian actually being the laggard of the three, that we could see some excitement here, but the fact that they're not able to give now strong guidance for the second half of this year, I think, is a concern, and showing almost the overall shift we're seeing in some of these travel and demand forecasts now into the back half of 2023.
All right. Thank you for all of that. Appreciate it. Jenny Horn, good to see you. Uber and Norwegian. Thank you. Let's get some insights in the news shaping the markets. And for that, we welcome in Ed Cofrancesco, CEO, International Assets Advisory. Thank you for being here. So we've even gotten in some economic news today. that's worth talking about. But what are some of the trends you're seeing in the market, and how are you feeling about this back half of the year?
Well, Nicole, you mentioned earlier how all three major indexes are up this year, pushing up against their all-time highs, making up for almost all the losses in 2022. So that's good news, but there's still a lot of things that are concerning. So overall, we're starting to get a little bit more optimistic, but I wouldn't say, hey, let's bet the house on all this. You know, we need to be careful and cautious. I think cautious optimism is the way we're looking at the markets for the rest of 23.
Yeah, understood. So you're feeling cautious. I mean, we have seen some nice run-ups indeed. For that being said, at this point, how much does the Fed play a role in your decision-making on how to have some strategy here?
Well, Nicole, I think that the Fed is reacting to what the market, the overall economy is doing. So we're following the Fed, but if there is more inflation, the Fed will have no choice. If inflation reignites, they're going to have to raise rates. In the same token, if inflation remains steady where it is or continues to decrease, then the Fed will be able to back off and stay where they are. And maybe we will see this soft landing. Again, we're still going to sit on the sidelines a little bit. We're going to make some bets, but we're not going to bet the farm.
I understand. Okay, so at this point now, are you concerned about a recession at all? Is it next year, this year? Do you think the Fed will be doing any cutting or have to do that?
That's a great question. You know, so we still fear that a recession could be coming to us in the fourth quarter this year or in the first quarter of next year. But obviously, the odds of a recession have decreased. I think we've seen that from all pundits and all market experts. Looking forward, it seems like we might be able to pull off this soft landing, in which case, you know, the Fed might be able to cut a little bit. But if it's a soft landing, then maybe they don't need to cut at all. And we just stay, you know, static quo where we are in terms of interest rates.
Yeah. Let's turn our attention over to tech, because that's an area that you've been focusing on. Obviously, we've had an incredible run-up with AI and the AI arms race, and even companies that may not really be AI names are throwing AI around, and how that could actually help their company overall. So what are your thoughts on the group? I know you have some stock picks for us, but just quickly on tech overall and AI in particular.
Well, you know, this market is old McDonald's farm. It's AI, AIO. I mean, so much of what we're seeing in this market is being driven by tech in general and anything AI related. And a lot of people, you know, look at AI and they look at, okay, well, all right, chip makers, we know the NVIDIA story. I think everybody knows the NVIDIA story right now. But there's so many other plays off of AI, and cloud storage is a big thing. You know, these large language models all require huge amounts of cloud storage. So anybody involved in cloud storage is certainly worth a look. And it's just reverberating through the entire market.
Yeah, understood. All right, let's get some names here that you like. As you're looking at a name like Baidu, for example, tell me about that.
You know, Baidu is, you know, I think everybody knows that they're a big, you know, Chinese tech company. What I don't think a lot of people know is how big they are. Major player in cloud storage. And that is certainly, you know, related to the AI story that we've been discussing. And so we like Baidu. We think it probably is undervalued from where it is. It's certainly not near its historical valuations. It's off from its historical valuation. So we think Baidu is a good play right now. And we also think Dropbox for the same reason. You know, Dropbox certainly off of its highs from a couple of years ago. It hasn't rallied as much as this market has, but we certainly think that that is a very good stock to take a look at.
Yeah, you had Silicom in there too. A quick thought there.
So Silicom, I mean, listen, the news yesterday was super disappointing for existing Silicom shareholders. It was a big miss. And, you know, we're calling that a little bottom fishing. We're not thinking, you know, oh, you have to buy it now. But sometimes you want to cast your line a little further out and do a little bottom fishing. And we're hoping that this news was just, a short-term problem. I mean, they've given us guidance through, the second quarter of next year, not looking so promising. But if this is just a short-term blip, this might be a good long-term play. So, I'm not pounding the table. You need to go buy it now, but keep it on your radar screen. See how this thing shapes up over the next few weeks and next few months, and it might be a good buy at these levels.
Right.
Okay, I got another Teladoc call.
All right, thank you so much. Edco Francesco, thank you. International Assets Advisor.
Actually ended up averaging down on him now.
Plenty more to come right here on Trading 360. We're watching
Nice bounce on that 38.2.
earnings this morning, so we'll take a close look at both of those companies. We have the CFRA healthcare analyst.
It's probably kind of setting up a head and shoulders there.
360 Spotlight. Today's disruptor is on Semi. The company has gotten plenty of analyst upgrades after reporting its earnings.
But it's pretty choppy, really.
All the details for us and take us through an example.
Not much direction yet.
Data was released, so we've seen some fewer jobs out. What it really means, the 360 round focuses on our labor market and our economy, and a big three is coming up. Three stocks,
So Terra below VWAP. It gets a retest on that breakout. They really started that music too early. Bull's like, turn it off. I'm talking. Nice guts. Yeah, I stepped away. I was a little late. So I'll move back to VWAP. Wait, did you say you got weeklies? Weekly 28 calls? Dang, dude. I got September's. Wait, you're talking about something else. 28. Do they even have 28? Oh, on the weeklies they do, huh? Got September. Yeah, September 30s. I see this as a longer term big uptrend on it, as this was a consolidation period for a year. So September might not even be enough time. Well, it doesn't even have to hold that whole time. My Zim calls are up 30%. The buy to open worked. That's crazy. I feel like that's the second time that's happened for me on Zim. Tried a good till cancel order and then build first thing in the morning. I guess it does work if you have conviction on the trade and the play. Go for it. Even in the morning. No, that's good with options. Just hot potato them.
Level that led us to those old highs
Nothing wrong with that.
Downturn.
Yeah, and look, we've been bumping up against that. I mean,
You can hot potato the monthlies or the yearlies or whatever. You just don't get as much of a movement. They're just safer. So you can trade it however you want it.
And the question is, was it too much? I mean, you have names like NVIDIA up 200%. And other names, Meta's up over 100%, Tesla's up over 100%. So
But yeah,
it's been an exciting
you
year.
definitely get faster returns with the shorter dated.
Is it too much, too far, too fast? But I'll tell you, I have a lot of people who come on and still see upside potential. That being said, let's get to some of the names that you're watching most closely. The first is Adobe, which is
It's down
trading around 546 today.
2.6.
I'm sure you've been following it. What's jumping out at you now?
Buys coming down
Adobe
some
still
more.
goes in with that AI picture, and I think it's really important to think about the side hustle culture that we have now. Going back to the bigger picture, there are, back in the recent downturns,
This is what I was
The
hoping for on those
consumers didn't
puts. I
have
just
this access
was a little
to
early.
these additional
I wanted to
pieces of
fully
income or
retrace to that,
concentration or things like
to
that.
VWAP.
So it's also helping boost the entire economy, and Adobe is a key player of that. So speaking about Firefly, when that released, their interest was 80 times more than anticipated. That's an incredible number. And out of all of the analyst ratings, 81% have a buy rating. But in addition to that, if you've played with Firefly or some of the new tools that they're creating, they're doing this direct-to-consumer model that actually doesn't have enough revenue exposure that's really been realized. Therefore, I think there's some upside potential from a fundamental perspective because their earnings haven't been accounted for. Just like Firefly had 80 times more interest than anticipated, so does the beta, the podcast platform that they haven't even taken out of testing mode yet. Once that releases, there's so much more that's going to come.
A lot of exciting things happening with
It's down 1.5 now.
We had George Sillis on yesterday.
Eyes
This was
coming
his
down a bit.
disruptor yesterday. And he was talking about this. He was
See
talking
if
about
this
the June
inverse
breakout
cut
and all the
finishes
different
down here
things
at
that they've been
455.
doing, you know, with and even advertising, but to your point, production and photos and all those kinds of things, but AI being a growth catalyst for this name. Ben, we'd like you to take a look at the chart for us. Your thoughts?
For sure, Nicole. You guys started off talking about double-digit, triple-digit percentage-wise gainers this year. Adobe's one of them, up over 60% on the year. And as we take a look, you can see a well-defined trend up on this.
Liechtenstein got some sun, it looks like.
We looked at Adobe, as I remember, we were
at the
trading
beach.
around 493. We talked about what we wanted to see in terms of this bull trend, a breakout to the upside, a new area consolidation forming at a higher level. It looks like that happened as we developed throughout the month of July. Last month, we balanced around 520, and it actually appears as if we're in a bit of a vertical phase to the upside right now, breaking out again, recent highs up around 553. The question is, will we start to form a new area of balance at an upper level? That's what the bulls want to see to validate that working assumption that value continues to move higher. Now, I do want to direct your attention here over to the left side of the screen because that's where the real bullish nature of this chart started out. It was back in May, beginning of, when we double bottomed back around 331, as you can see, and the fact that we have been, well, and continue to be exhibiting bullish sentiment here since. Very bullish tone here associated with the price activity. Taking a look at a little bit of a longer term look at this same, again, price chart here. You can see the significance, the double bottom we just identified, but look at this. I'm going all the way back to beginning middle of November, and you can see again the significance associated with this area that we just came off of, the 320, 330 area. You can see the conviction to the upside since. Let's take a look at where we are. I mentioned here the year to date, 62% here, almost 63% to the upside. You can see holding above the 50, holding above the 200-day moving average. The one thing I notice is RSI is a little bit limited in terms of participation to the upside, so the bulls are going to be looking for that to advance higher, but price leading the way here. Multiple time frames are seeing trend higher, a lot of conviction associated with this move.
Yeah, I think, you know, and I like that long-term chart and how it was bumping along the bottom, but now you've had this breakout. All right, final thoughts on Adobe.
Yeah, I love seeing that trend line. We want to see the trend line slope upwards in addition to be above that, so that's a really good sign. I love it when Ben points out the charts and they match the fundamentals.
Yeah, and that one's up 62% this year. Another real winner is Amazon, which is up nearly 60%. It's up 57% this year. I was reading in the New York Post today how well the company has been doing, and also just the speed that they have, record speed now, and also advertising growth was looking good for Amazon. I mean, that's something sort of that was an area of worry for pretty much everybody over the last 6 months. So that too was going to help them along.
Yeah, I think it's so interesting that have these broader talks about soft landing, recession, or whatever your stance may be. But if there is increasing sales and additional advertising, that's just a really great testament to the consumer. Nonetheless, with Amazon, their Prime Day was absolutely a success. And just like you said, they have speed to delivery. Definitely saw that article, which builds on that thesis. What I think is really interesting about Amazon in particular is the growth of AWS. They have a lot of data. That is very necessary for building those large AI models that are that are there. So tons of opportunity there. In addition to that, they're building this infrastructure. And that's going to be necessary and something that's essential for the small business owner that they're capitalizing on that helps for that Prime Day success because it has a variety of products now, which speaks to their e-commerce. And then in addition to that, it's the speed of delivery to stay with their Prime Day or their Prime client success. And in addition to that, they actually have a broader adoption not domestically, but across the globe. And now they're having cross-product penetration, meaning you sign up as a Prime Video subscriber, which is growing. Now they're going to target you to become a Prime subscriber on their e-commerce platform. So a lot of revenue opportunities available via Amazon that are just beyond AI even.
Who remembers when Amazon sold just books? It was just a bookstore. Does everybody remember that? And now, I mean, you could get your wedding invitations and practically build your home. Also, Amazon's reporting on Thursday,
Yeah, TUP.
August 3rd, so we'll be watching for that. Ben, your thoughts here on the Amazon chart?
All these options they
Well,
added.
Another instance where the fundamentals are going to match what we're seeing in terms of the technicals, very much a bull trend. And as we look at the move, you can see the areas of consolidation that formed
so
since the
freaking
beginning of
choppy.
May. Let's just go to the bottom left corner of this chart, and as I identify 102,
No one decided.
again, along the way, this really well-defined staircase-type pattern that continues to establish itself, and what I notice here is a limited retracement associated with it. So each time we're forming a new area of consolidation, the working assumptions that to validate the trend or to validate that working assumption, we're going to look for another area to form at a higher level and that continue to play out. We don't want to see retracements or
Yeah, it's almost on 1,000%.
pullbacks that take out areas prior to the one that we're currently forming. So in this instance, we're balancing basically since the middle of June around 131, and we don't want to take out 124. That would be a flag flying in terms of the working assumption that we're forming value at higher and higher levels on the hourly candle chart. Now, we did see that invalidation happen because we had been trending lower on the longer term. You can see that 176 back.
Shut up, Agalo, you're
2022,
lying.
150 in the spring of last year, and then you can see 123 prior to breaking down, balancing around 100 in the end of last year.
You guys are getting desperate to pump stuff.
Retracement we've seen, and talk about taking out a significant area as we were balancing around 100. You're constantly
And Rory
referencing
Kitty
again
posted
the prior
stuff.
area balance. In this instance, on a trend down, it's that area prior to above, that's 123. And look, we took it out. So everything above 123 in this instance has been bullish and invalidating the trend on this time frame, but there's been opportunity on that more granular time frame we just looked at to participate in that trend. And speaking of this trend, look, we're above the 200, above the 50 RSI, somewhat limited in terms of any indication that we're going to break out here right now, but no indication that we've rejected this upper level. So again, fundamentally, technically, very much supportive of this bullish narrative here that Jessica just laid out.
Thank you for that, Ben. Also, I should add in, I saw today a virtual health clinic for Amazon, a worldwide health clinic. All right, last but not least, we're going to take a look at Alphabet Google here, which is up about 50% this year. Looks like just hit a recent high in 2023. Your thoughts?
It did. I still don't think that Google's potential, or Alphabet, has been realized. There is so much opportunity within AI. You know, I love AI. Did such a deep dive into it. And as far as the processes that are required in order to build that type of model, Google touches, out of any security, most of those access points, which means there's a lot of opportunity. And if you think about the stocks that are performing really well across AI, it started with the chips, and now we're getting into cloud, and it's going to get to data. So it's going to start moving, but Google is a beneficiary across every instance of that. And so in addition to that, though, they're still beating on cloud. YouTube search is there.
We'll see.
Remember we talked
No, we
about,
won't see.
Microsoft
well.
taking the market share in regard to search. Data still comes out that Google has that market share, and it's not trending downwards.
It's amazing because this is something that has really been somewhat of a specialty of yours. I mean, I know you're doing the broader market, but overall, I mean, AI and some of these tech-related names have been names. And I'll tell you, a lot of folks, Ben, have been very hot on Alphabet Google and like it, even though it's run up already. Your thoughts on the chart, Ben?
Well, and rightfully so, Nicole. Another example of a trend environment on a more intermediate time frame, and one that invalidated a longer-term trend. Let's begin with the bullish momentum, the upside momentum we've been seeing here. Going back to the end of March, we were trading down around 99, just below 100.
And you should mention that, Vincent, because GME is also a ticker.
On the way up. Very well-defined staircase type pattern. Again, exactly what we look for. Constantly referencing the prior
some would say it's doing better than GME.
And you can see in this instance, the retracement.
I think GME has
really became a little
dropping to go before it finds the support.
We saw back in the middle of June, beginning of July,
like 20 bucks.
Limited at the 116 level.
After that 18, after that 15,
to the downside. So
and
again,
10.
Off to the races, we break out of the
Getting one of those spots you can find. And its bottom.
Bouncing around 131. This is very much a bullish pattern, much like what we talked about Amazon. Speaking of much like what we talked about in terms of Amazon, almost an identical chart, right? Longer term trend lower. We're on the daily candles. We had been seeing value move to lower and lower levels, but as we were bouncing around 94, what are we referencing? 112. Take a look at what happens. The conviction associated with that move through middle of April, beginning of May, a gap up through that 112 level, and balance forming again at a higher level off that low. So you can see
MSGM got shut down on that
move we just looked
alt.
At here really started out back in October, November. Bigger picture chart.
Nicola's testing the highs.
Where we are relative to the daily, the 200-day moving average. There's that low that I mentioned back in October, November of last year, 84. Look at this. Breaking above the 50 back in middle of March. Have yet to look back. A couple tests thereof, but big gap up here. This one's off to the races. We do want to see RSI participate here now and start to show some enthusiasm to the upside.
Yeah, and I saw an AI-injected Google Assistant. We'll be taking on Chat GPT and the likes of that. Ben, thank you so much for that. Jessica, final thoughts?
Yeah, it's an interesting market. The biggest macro headwind, of course, is that labor market. We want to see an increase in productivity, and
I heard IAP's going to cut their divvy.
Yeah, it's great to see you. Jessica Inskip, thank you so much for being here of Options Play. And of course, our own Ben Lichtenstein for the big three.
Busy bee. Come on, little bounce off of support there.
And Pfizer both beat on
by little, I mean not really
Analyst
anything
with us, who has
yet.
buy ratings on both of these. We'll find out why next.
The candle through VWAP. VWAP's down here. Error. Here we go. The baby channel. Range on Friday. Nicola, high of the day there almost. And a nice cup and handle if you caught it. my gosh, you're such a bot. I'm gonna make some Reddit posts tonight. This is a big opportunity on nickel, I think. That's a big cup and handle to break out of. What? Today's the day? Teladoc had a nice bounce there. 38.2, it's above VWAP now. That is neat.
When it comes to the stock, when it comes to the upside, we are still seeing short interest sitting at around 26%.
Yeah, I remember when that came out.
Right now, sitting at 0.
About them banning LEDs.
8 days. So even if you were to,
that's a long time ago, it seems like.
You would be bought back into those shares. And my contact actually just gave me the rate, the last rate that
what
was
stocks
out there
to buy with that news?
Trying to short the stock. If you wanted to try to short the stock right now, it's sitting at around 144.75%.
Look, Cameron, you're communicating with the bot.
On a daily basis, that would be the equivalent of 0.4%.
You're like an AI
on that position, so that's very expensive.
Like
when you're
code writer.
Stock, but we will see how this is all going to pan out at the end of the day. We are seeing reports that they may report earnings tomorrow, but they have been late on reporting earnings. So I would not be surprised if they actually delay that to later this month. But the expectation for some is that they could actually announce at least preliminary earnings tomorrow morning.
I can't get over this.
They have earnings tomorrow?
I said 20%, and it's gone up another 10% since I last checked. It's up 32%. And if I look at a 1-month chart, I mean, we can't even type it fast enough. It's up 606%. I mean, thank you for covering this one, because it just shows you how markets can go wild one way or the other. Kevin Green. And I thought these meme stocks were sort of done, but I guess not. I guess they're back. Kevin Green.
Anything that moves big is a meme stock now.
It is time to turn our attention over to Big Pharma and spotlight Merck and Pfizer. Both of these pharmaceutical companies reporting the earnings this morning, and we welcome in Sel Hardy, equity analyst at CFRA, who has a buy rating on both of these names. Before I get to the details in each of these companies, what are your thoughts on the group, Big Pharma overall? I mean, how are we feeling? Because I know you have buys on both of these names.
Hi, Nicole. Thanks for having me. Very nice to be back. So essentially, we think pharma is a bit of a mixed bag right now. Our outlook was recently changed to neutral from outperform, because we definitely see some companies standing out, such big pharmaceuticals such as Merck and Pfizer, which we're going to talk about shortly. But we have also others that are not doing so well. So we have to be very selective, and it's time to be cherry picking.
Yeah. I wonder what some of the headwinds are. I'd like to hear more about that, so I'm fully informed. But in the meantime, let's start with Merck. I know you have a buy rating. What jumps out at you? What did you like about the latest report about the future of the pipeline?
Yeah, so we continue to have a buy recommendation for Merck. Our 12-month price target is $124. So this points to a considerable upside potential at current levels. The stock is trading at a discount, so we think Merck is still very attractive at current levels. Looking at its long-term outlook, our recommendations are long-term, so we are looking at the long-term outlook of the company, and we think that Q2 results were slightly better than expected. When we look at revenue, for example, revenues were remarkably higher than the street's expectations by $585 million, and this was due to robust sales growth in the key oncology drug Keytruda. Sales were up 19% year on year. The street expectations and our expectations were lower. And the sales were very strong across all indications and across regions. Similarly, the HPV vaccine Gardasil sales surprised us on the upside. They were up 16% year on year, and there was strong demand globally, particularly in China. Consequently, we saw the company raising guidance for the year to $58.6 billion to $59.6 billion, and we think this is achievable. Previously, we expected Merck's sales to decline slightly by 0.4% year on year, but right now we expect the sales to be slightly up. So we think on the downside, though, that the second half of the year is going to be a bit more challenging, so we revise our estimates accordingly. But we think starting 2024, Merck will be again well-positioned for healthier growth, and we think we'll see more visible contributions from the recent acquisition of Prometheus Biosciences, which closed mid-June, and we think this will boost Merck's immunology portfolio considerably.
All right. And then when we take a look at Pfizer, which is to the downside, I mean, obviously they did so well with COVID, and now with less demand for COVID vaccines and such, that plays into the earnings report. I mean, that's something that has changed for the company over the last year or so. What's some of the things that will help to propel it higher since you have a buy rating?
After today's earnings report, we kept our buy rating. Again, we have a long-term outlook for Pfizer, and we think the company is attractive at current valuation given its long-term outlook. Our price target is at $43, and we think there's, again, considerable upside at current potential, at current levels. So Q results were a bit mixed. As you mentioned, we were expecting some downside because of the COVID-19 revenue losses, but the losses were a bit higher than we thought for both the vaccine and Paxlovid. But nevertheless, Pfizer kept both Comirnaty and Paxlovid sales guidance for 2023 unchanged, respectively at $13.5 billion and $8 billion. But it's lowered the high end of its revenue guidance range from $71 billion to $70 billion. So we think also to address ongoing concerns, the company mentioned that it expects the Seagen acquisition to close by the end of this year or early 2024, which we think is going to be a big catalyst going forward. We think the Seagen acquisition will have considerable potential for the immunology area for Pfizer. But also, there are so many other things going on with the company. We think there was a recent pullback explained by, as you know, there was a big problem with tornado hits in the North Carolina sterile injectable manufacturing plant mid-July, and then there's considerable noise around the Seagen acquisition. So we saw a pullback recently, but we think this is a good opportunity to invest.
Yeah, understood. Yeah, I'm aware of that Rock Mount, North Carolina plant, and there's no real clarity as to when they'll be able to bring that back after that tornado. I'm sorry we don't have more time. I wanted to talk about some of the weight loss drugs and maybe some of the other drugs that you said have a little more headwinds ahead of them, but we're out of time. We'll have to leave it there and talk next time. Sel Hardy, thank you. CFRA Research buy ratings on both Pfizer and Merck. Thank you for your reporting today. Some details on those big names. Thank you. Coming up next are disruptors on semi spikes after reporting earnings and is being upgraded across the board by the analysts. Let's get some more details. George Still is standing by. He'll have a closer look and an example trade next.
I had to check to see if that was a ticker. LEDs. Eyes come down a bit here. More barber coating. Dish is down 2.5. Charge points down 2. Safe's down 1. Burned my lips on pepper. Ouch. Today is the day.
$1 billion just in automotive sales. And the company did report earnings as well. It came in relatively flat at around $1.33 per share relative to the same quarter last year, but it was still higher by about 12 cents, beating the estimates by that amount, while sales at 2.09 billion were again flat on a year-over-year basis. But if you look at the breakdown, the automotive, like I said, revenues were higher by 35%. And the other thing is, if you think about LiDAR sensing technologies, that's another area where On Semiconductor is actually making a lot of inroads into, of course, moving into full self-driving, or if you will, autonomous driving, which we know eventually will be down the road. So I think it's a very interesting company. It's really not necessarily a high-flying company when it comes to down to the semiconductor space. Companies like NVIDIA and AMD, which are really focused on artificial intelligence. This is really a core industrial, analog and digital-based semiconductor company. Some of the analysts are very constructive as well post-earnings. If you look at a couple of the upgrades, or actually a few, Bank of America increased their target to 130, and even Morgan Stanley increased their target to 116, as well as Deutsche Bank moved their target to 120 from 110. And I think there's actually a compelling reason why they're increasing their targets, as well as the stock having gone higher by about 71% over the last year. If you look at the company's forward revenue growth estimates, it's around 9%, which is equivalent to last year's sales. But at the same time, the EBITDA growth for the business on a forward basis is expected to be 21% versus 16%. So that's a 500 basis point expected EBITDA growth rate relative to last year, with sales growth, which is equivalent to last year. And I think that's one of the reasons why the analysts are really constructive, not to mention the stock from a valuation standpoint also looks compelling, considering it's only trading around 21 times forward earnings with about 21% earnings growth. And that, again, is 1 times earning growth, which one would say is certainly fair value, considering a semiconductor stock that's growing in the low 20% range for earnings.
All right. Thank you for all of that. I mean, we see the growth that we're seeing in automotive, but LiDAR, I mean, that's another area that you're talking about, those sensors, that helps with self-driving. So there's a lot that's going on here for On Semi. That being said, tell me about the example trade, because this just hit a new 52-week high.
Yeah, so looking at the chart, it did hit a new 52-week high. It broke out of a short-term resistance area at about $105, Nicole. So there's a potential if you look at candlestick charts to fill that gap back to the 105. So with that said, we can participate if the stock does pull back or does continue to the upside. So in this case, everything lines up to sell the September with 45 days to expiration, 105 cash secured put. And essentially, you could sell that for about $3.75 a share or $375 a contract. So the stock could continue higher, and the objective here is to have the premium that we're selling for erode to zero by expiration. But the stock could also fall down to the 105 area before your assigned shares. If your assigned shares at $105, your cost basis is effectively 101 and a quarter. And so again, you're yielding or getting about a 3.7% yield to strike price between now and expiration in 45 days, but it also gives you the flexibility just in case it does come down at 105 level. But putting on this trade, you have to be willing and able to be to purchase the shares if assigned at $105, but your cost basis, like I said, is around 101.25.
George Sillis, thank you for all of that. Really appreciate it. Disruptors on Semi, and today we were talking about Adobe with Jessica Inskip, and I was able to bring up some of George's points from yesterday. Thank you, George. Up next, we're talking jobs in the 360 round. We got in the JOLTS data, all that job openings, and the amount of quits we're seeing too. Our expert panel is ready to break it all down next.
Nice, Cats. Well done, man. Hmm. No, it's good. It's good guts in and out. I don't know if I like it long term. I just don't know if that's the right company. I don't know if that's a good company. I like the idea of it. Teladoc Health. Cough. Yeah, it's coming out now. My body's releasing the demons. China COVID demons. Dude, this chop today. Ugh. Gonna make the whole move in the last 10 minutes of the day. And shake everybody out. This is like a new, I think this is a new little COVID I have. It's really mellow, just a cough one. My kids had it too. I think a lot of the sicknesses we used to have all been kind of mutated with COVID. The characteristics of them are different. Well, yes. How did you know, Granite?
Segment.
You better.
This is something we've been asking of Uber for so many years now, and the fact that they've been more consistent with their earnings.
It's like Bat is back on the menu, boys.
Has been pretty astounding to watch.
Probably.
Incomparable to Lyft, which really seems like it's difficult to actually even compare the two's price activity this year in 2023 at least.
Yeah, I heard some comments that the leadership was saying Lyft is a strong competitor and they're welcoming that competition. That seems a little self-serving given the fact that if they didn't have that competitor, they would maybe have some regulators breathing down their neck. But I thought it was important too that they see the Uber One membership has been a big driver. They cited some numbers that said basically members spend 4 times more than non-members. That was 27% of their delivery bookings, which I thought was quite interesting. But as we look ahead, obviously mobility was the bright spot of this. The delivery numbers are okay. The freight numbers are kind of disappointing. So this was all about traditional core ride sharing, Jenny. As we look ahead, I mean, summer, we're in August now. Some of these tailwinds, these vacation times are basically...
Nag is down 6.8. That's too bad.
That is. School's about to start back up. Is that potentially worrisome, especially if gas prices go higher? Maybe less drivers, less people taking Ubers?
I think what's worrisome is actually outside of even the ride-hailing space and some of the more disappointing guidance we've gotten from so many of the other travel spaces now. I mean, airlines are revising down some of their demand expectations. Cruise lines we're seeing getting killed today on some disappointing guidance. So does this mean we're starting to see some of that slowdown in spending finally trickle into the market? And I think that will impact, in turn, a name like Uber, also Lyft, given the fact they do have a pretty wide exposure to travel, but also just to consumers' income right now. Are we seeing people start to say, wait a second, all of a sudden our credit cards have gotten out of control? This spending that we just keep talking about dissipating, is it starting to reflect now into the second half of this year? because I have to say, as an Uber user, I only ramp up my Uber usage as it gets a little bit colder. I hate to even think about that coming on the near term, but that to me, seasonality, I think could only be a good thing, at least in the next few months for Uber, but that's specific to, I think, how I use Uber in a more urban area. Travel, I think, is a huge way to sort of gauge what we could expect for the next couple of months. So far, the travel numbers for the next half of this year, not looking as strong as we would have thought.
Yeah, travel definitely in the crosshairs, but I think one of the reasons why they're selling this off is because of the investments that they made this past quarter. Joby Aviation in the eVTOL space, another car company that's a startup that basically does driverless car tech. Those were actually
Uber bought into
robust,
Joby?
and that actually created some of that profit for them. So
I know
maybe
that.
some investors taking some money off the table here with the expectations that, hey, maybe those investments won't do well next quarter because
BBBYQ bounced a little bit. It's only down 6% now.
We'll have to keep an eye on that, but not surprising, some pretty good results here from Uber. Thanks to Jenny Horn, markets correspondent here on the network, breaking it down for us. But now let's bring in Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research. Randy, I wanted to kind of get your take here. And like I said to Alex, this is probably a much needed, like maybe a little break or a pause in the rally that we've seen so far in 2023 for markets at this point, right?
Well, I'd say it's not enough, to be quite honest with you. I've talked about this for the last few weeks. We really are overdue for probably 3 to 5% or so downturn. So any downturn we can get is good because, I mean, we're talking about a 21 forward PE on the S&P 500, a rally that has pretty much been going on almost daily, not every single day, but almost, at least in the Dow Jones has been going on almost daily since June 1st, since they signed the debt ceiling deal. So yes, things are getting a little bit ahead of themselves. I know the markets are looking way ahead, at least to Q4 earnings. Q3 earnings are supposed to be better. Q4 is supposed to be even better yet. But sometimes when the market gets ahead, we need to let the earnings catch up, and we're just not there yet. So yeah, I'd say any kind of pullback, any pause, and this one's not even big enough, would be a good thing for the longer term trend.
I like that aspect of it. You know, the valuation, Alex, that's something that we discuss here on the show quite a bit, is that it's getting stretched here a little bit. And I mean, hey, we're going to probably avoid a recession. That's a positive. Earnings are coming in better than expected at this point. But if you start looking at the consumer spending habits, inflationary impacts still there at that point, do you know, kind of look at this that, hey, maybe that forward-looking PE that Randy just mentioned is a little frothy at this point due to the fact that, hey, the economy's not exploding, it's still growing, but hey, maybe this is a good time to maybe take some chips off the table.
Well, I think that there's a lot more risk of a hard landing than there is of a no landing at this point, given where prices are, if you want me to be frank. And so much of this
Well, you're not Frank. You're Alex.
Seen the last few months has been for a
Why don't you just stick to who you are?
half of the year. Well, what if that doesn't actually happen? We're basically trading a lot of these names off of what they tell us is going to happen. Well, what if it doesn't actually play out that way? Yeah, of course, they're going to guide us in a direction that they think is you know, responsible and you know, in some cases conservative, but in some cases it's aggressive. And we just saw the case of that yellow freight company, which was one of the bigger trucking companies that was basically in 2021 saying that, you know, times have never been better, and basically shut the doors a year later or 2 years later. So, you know, things can happen quickly, I guess is what I'm trying to say, and so much of this is relying on a second half rebound in the U.S., a bounce back in the U.S. Well, we didn't get the huge reopening in China. What's to say that the economists and the projections for the second half of the year are going to be any more accurate? So I'm sort of in the show me phase. Show me some earnings. Show me some results.
Zim is now green on the day.
Happen in the future.
Yeah, it's in there.
These, even on a forward basis, are quite high, but they're extremely high if you look at them in sort of real-time earnings and earnings for now, not just 12 months down the road.
Yeah, and Randy, you know, it's that Goldilocks scenario that I think the market's trying to play out here with the optimism so far. Now, we have avoided those pitfalls that a lot of people expected to explode a little bit here in the first half of the year. But when you look at this, I mean, you've been in the markets long enough, Randy. Everybody's always optimistic for, equity markets moving forward. And if there aren't any of those negative catalysts or uncertainties out there, is this a time for that traders and investors should start looking at like, hey, maybe I should hedge some of my winners so far in 2023 because it's not a bad idea?
Well, there's never a bad idea to take some profits, and that doesn't mean you get all out. I mean, that's a terrible investment strategy all the time. But honestly, yes, if you've got some gains, I mean, certainly there are some tech stocks that we know are up 100% or more. Why not take a little bit of that off the table? I think that's a fine idea. Putting on hedges can be a little bit expensive, but maybe just reduce your risk a little bit, increase your cash allocation a little bit. I mean, frankly, I don't know why people wouldn't put a little bit more cash into some fixed income products right now that are paying 4.5%, 5%. That's pretty safe money for the most part, and we haven't had an opportunity like that for a very long time. Sure, there are some stocks out there that pay dividend yields of that level, but at the same time, you've got price risk, whereas in the bonds, you don't necessarily have that if you're planning on holding them. So it doesn't make any sense not to take advantage of that, at least while it's out there right now. But yes, earnings, I mean, keep in mind that the earnings season started out really good. That was because it was led by financials who tend to be some of the early reporters. But once you start getting the reports in, as we are now, from materials, healthcare, and energy specifically, those three sectors, they're all reporting year-over-year negative growth. That's the only part of the market that's really getting crushed right now. And as a result, we're now seeing the quarterly results trend back towards the longer-term norm. But where I think the positive is in this is that we've still got well over 2% GDP growth. We have positive earnings expectations again.
I know, man. The float's pretty small on top.
For Q4, they're supposed to be higher yet. In other words, Q2, which we're getting now,
every day it's like 5x the float.
To get into a recession, and I'm not saying it can't happen, but it seems pretty unlikely here in the next couple of quarters, because you got to get to, first of all, you can't really declare a recession unless you have negative GDP growth. And we already had that last year, and they didn't declare it for 2 consecutive quarters.
Exactly.
Still at positive plus 2%.
We had that last year, and they didn't declare it.
If we get to negative GDP in Q3 and negative GDP in
Wonder
Q4,
why.
which right now no one's predicting that, then I could say, okay, sure, we have a recession by year end. But as long as you've still got positive GDP growth, there's no way they're going to declare that a recession. And even if we did have negative growth, that declaration wouldn't come until sometime in probably late Q1 at the earliest. That doesn't mean we can't have some softness. That doesn't mean we're going to have a robust growth. I frankly think the S&P 500 could potentially take out its old high, which is only about 5% above where it is now by year end. But that means the bulk of the growth we've seen in markets has happened already in the first half of the year. The second half, it's going to be a little bit more modest. So again, but that speaks to what you just said. Take a little bit of that money off the table, reduce your risk just a little bit. There's less opportunity to the upside, even if there's not a bunch of
we're never in a recession.
Pointing to a major meltdown to the downside.
Yeah, and I think the consumer's been helping this economy so far, Alex. Helping support that GDP growth when many expected maybe a recession coming in the latter stages of this year. But if you look at the jobs numbers today, JOLTS report, 9.58 million in June. Now it's lower, but that's still on a historical basis is elevated. Historically, it's about 7.5, 8 million at the most. So we still have a lot of job openings, but hires and quitters have started to a little bit.
Yeah, layoffs also easing as well. So some of the proactive companies may be getting that stuff taken care of.
Terra hanging out.
But falling to the lowest level since 2021.
Well, VWAP,
again, this is
that's
backwards
good.
looking, and I would argue the most optimistic view of the labor market that you could possibly find. And it's starting to show signs that it's pulling back quite substantially. If I could, real quick, kind of elaborate on what Randy was talking about. I mean, earnings growth thus far, 291 of the S&P 500 names have reported, is negative 7.7% on the whole. So, yeah, it's surprising. They're beating estimates at a pretty good rate, but they're lower thus far as a collective. So, yeah, maybe the names like Apple and Amazon can throw their name in the hat and adjust that, but thus far, about 60% of the way through, we're firmly in red territory. Sales growth is only 0.5% higher. So, yeah, we can point and say it's mainly energy and a couple other sectors. But at some point, we can't just cherry pick only the good stuff and say, hey, look how great everything is. 7 names have driven this rally, over 2/3 of it. That's not sustainable.
Yeah, and I think a lot of people are putting in the bucket.
Well,
the
come
fact
on,
that,
Frank.
hey, the breadth of the rally is starting to expand a little bit. I mentioned the Russell 2000 small caps rebounding just over 6% in July. So I think a lot of people relying on that. Hey, let's take a quick break here, guys. When we come back, we're going to get into a discussion about AMD. They've got earnings after the close. Chip makers rallied about 80% so far this year on AI hopes for the Q4. But
Cat 8.25 on their earnings. Wasn't yesterday choppy? No, not as much. Or yeah, it was. The end of the day rip. There at the beginning of the day drop. Fair work.
Like Nvidia or even Apple at this point. So you can make an argument that there's potentially still room to go. It did get to higher prices thus far this year, up to about 130. But they got to say something optimistic, and they probably got to, show some real proof that the AI boom is affecting them even marginally as much as it's affecting Nvidia.
Right, Randy. To that point. Lisa Su, the CEO, she's usually pretty optimistic on these calls, but we've seen some seasonality issues in PCs, which they're calling a trough for. Data centers starting to slow a little bit here, but this is all going to be about the expectations for AI. Maybe does she have to say something like, oh, we've gotten a bunch of orders, we've partnered with a bunch of the other big tech names at this point?
We'll say something like that. The thing about chips that are complicated is that there's a lot of different types of chips, and not every chip is appropriate for AI. There are a lot of suboptimal chips that can be used in all sorts of other applications. A lot of the ones that like, say, for example, the automakers need aren't nearly as complex or as expensive or as cutting edge, excuse me, as some of the AI ones are. So there's still a big market there, but that's where some of the fluctuations take place. One of the things we talked about in this AI podcast that we released last week, in fact, I was speaking about this, is the fact that not every company that's involved in AI is going to want to or have the ability to buy the best, most expensive chips out there. And as you were just alluding to, Alex, there's not enough supply coming from companies like NVIDIA to cover it all anyway. So I think crumbs is maybe diminishing the potential opportunity out there for other companies, not just AMD, but other chip makers, where it's not quite maybe the very best, but it's also substantially cheaper and it's fully adequate for a whole lot of other applications. So those types of opportunities may exist out there. Now, that doesn't mean that she's going to say that, but my suspicion is, as you said, she's a very optimistic CEO, as most of them are, and she's going to try to point to what lies ahead, because as you all know, we don't buy a stock for where it's at now. We buy a stock for where we think it's going, and it's going to go wherever it sees that there's opportunity and things good that are going to be happening down the road. So I would certainly expect her to say something like that.
Yeah, and to that point, Randy, about guidance moving forward, I mean, that's what kickstarted NVIDIA, their guide of over 50% higher last quarter moving forward. So AMD might have some of these partnerships already in line, for their AI chip, the MI300, which expectations are pretty high for this one. It's going to be a solid competitor to NVIDIA, maybe not at the top part of it, but if you have that thought process, Randy, where instead of crumbs falling off the table, I'll take that one back, but maybe it's a pizza, and maybe they're going to get a slice or two on that. How do you want to look at this one from an example trade perspective?
Yeah, so again, let's take all that into account, and this isn't my personal opinion. We're just trying to looking at what we see available, and we want to put together an example as a result of that. Let's say that is your perspective. Perhaps there are, the pie can be sliced in many ways, and you can do extremely well in all kinds of different industries if you're not the biggest player out there. You can be number 2 or number 3 and still get a substantial portion of the opportunity and do just fine. In fact, staying on top is oftentimes really difficult. There are companies out there that have even done well by intentionally not trying to take the lead in a particular industry. But let's say that's your perspective. Let's say there is future opportunity, and you think perhaps there's an upside here. I thought, well, given that, as you said, this stock's up about 80% year to date, that's ahead of where the SOX index is overall. But at the same time, it hasn't really made any progress for about the last 60 days. So maybe there's a little bit of upside here, but not a huge amount of upside. One way to play that kind of a perspective would be to put together what I would call not a bullish strategy, but an anti-bearish strategy. So an example of that would be what I've put together here as an example trade here, which is a vertical credit put spread. Normally we think about puts as being bearish strategies, but when you put together a vertical put spread where you bring in a credit, it actually ends up being like I said, an anti-bearish strategy. So we know earnings are coming out tonight, so let's just look out to the end of the week and do a relatively short-term example. Well, if you bought the 109 puts that expire at the end of this week and then sold the 114 puts, you're creating a 5-point credit put spread. Right now, this trade could be put on at about a 170 credit, which means that it being a 5-point spread, you've got a $3.30 max loss opportunity. The maximum gain is going to be the 170 that you receive in when you put the trade together. Now, here's where this is an anti-bearish trade. The stock right now is trading at around 117. The break even on this at a 170 credit is around 112.30, which means this trade is already about $5 in the money, which means if you say it's bullish, it doesn't really need any upside in the stock. And in fact, the stock could move against you $3 or $4 and still potentially you could eke out a profit on this one. All it has to do is be above 114 at expiration to hit max profit. It's already there right now. So what you need is not for this stock necessarily to go up, but you need it to either just remain sideways, go down just a little, just not go off a cliff, and you have the opportunity to make a few dollars on this one by the end of the week.
Yeah, neutral to bullish, short put vertical here that we're taking a look at. Let's walk through this. August 4th weeklies expires in 3 days. Selling the 114 strike put, buying the 109 strike put, $5 wide on that, collecting a credit of $170, $330 in risk per spread with that break even, as Randy mentioned, about 112.30. Alex, that's got a probability of about 65% that break even will be out of the money at expiration. You profit in 3 out of 4 scenarios on this type of trade.
Yeah, this is a pretty standard, classic way to consider using options to create a risk profile that has defined risk and probabilistic. That cushion can be, of course, erased in a hurry with something like earnings on the horizon, which we know are. So that's something to bear in mind. But I like the way that Randy phrased it. It's just asking the stock not to go down, and sometimes that's all you need. If stock opens up at 117 tomorrow, that would be a win for this type of trade. So much of this report is going to be guidance. I mean, the numbers that they're going to report for this quarter, if they're where the expectations are, it's kind of a bad quarter. I mean, they're going to lose 45% in earnings and 18% year over year in revenue. Only one segment is slated to show any growth. This is not the AMD that we know. So a lot is riding on what they're going to talk about, this bounce back to growth that is expected to kick off next quarter.
With this type of strategy there, you've got 3 days, so it's a short-term one. You've got some assignment risk on that short 114 strike put into expiration at the end of the week here, so have to take that into consideration also. Risk-reward setup, you're risking, or your potential reward on this is about the third the width of the strikes nearly on this one, but a good look at high probability short put vertical here in AMD going in earnings. And thanks to Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, for joining us, breaking down markets in AMD. But coming up after the break, Alex and I are going to be joined by Andy Swan from Likefolio for discussion on Starbucks, which has underperformed the overall market this year ahead of their earnings after the close. Stick around, we're coming right back.
Watchlist can help you keep track of securities you're interested in. To add a watchlist to the left sidebar, select the plus sign, then Watchlist. When the default list appears, select the name box, then Create Watchlist.
because it seemed like last quarter, the last couple of quarters, it's growing at double digits. People are spending more money. It's become a staple instead of a discretionary item. What kind of data you guys have?
Yeah, I think you've nailed it there. It's kind of a staple instead of just discretionary item. And, just to be clear, Likefolio data covers pretty much all of the English-speaking world. So that can actually penetrate a lot of markets worldwide, but really not China. So we don't have much information on what's going on inside of China. But when we look at Starbucks kind of versus, I would call it fast food competitors, are really not sure what category to put Starbucks in other than, kind of an addictive product, an addictive company. But, this chart really shows all of these competitors, everyone from Shake Shack to Starbucks and McDonald's, all plotted out. And you want to be further to the right and further up, because further to the right means more and more people are talking about your brand and products. Further up means that your customers are expressing higher levels of happiness. And you can see at the top, Chick-fil-A really sets the standard for the fast food industry in terms of customer satisfaction. And what we're seeing is kind of a little bit of a breakaway or a shift in the old guard to the new guard. You've got Shake Shack and Chipotle over on the right, pretty good happiness levels. These kind of seem like the future of the fast food industry, where you've got kind of the old guard all together with slow or declining growth in consumer enthusiasm and a kind of lackluster level of consumer happiness. And Starbucks is just kind of right in the middle of that. So I think the Starbucks play here is really just one of how much are they able to squeeze out of the wallet of each customer that comes into the store.
Good day, psych you up.
We don't see any indication that, at least in the English-speaking world, they're really exciting the customer base or new prospects. I think it's more about how much are they getting out of each customer coming through.
MSGM broke out a VWAP there.
Or
a big cup
and through their
intraday
initiatives. And so overall, we kind of think Starbucks is doing what it should be doing right now, and that is relatively flat stock performance, because we don't see anything exciting on the horizon. In fact, we think it's going to be difficult for Starbucks to have a really positive message going into this earnings call.
Yeah, I'm seeing North America accounts for about 3/4 of the revenue for Starbucks. So no China data, no problem. Andy, we get a pretty good look just looking at the U.S. But what I was going to ask you, and I think you both allude to a point that I've been making for a while, at least amongst my kind of generation, it truly does seem like, regardless of what these coffees cost and the fancier they are, the more expensive they are, that this is truly one of those things that the millennial generation is willing to shell out cash for and will give up last. They would forego, maybe a vacation if they could have their Starbucks on a daily basis, it seems. But with that in mind, I look at this data that you provide. Starbucks on the lower in terms of percent positive now, and total mentions is fallen almost 20%, it looks like. This approach of trying to squeeze out every penny, this approach of constantly adjusting the rewards program to make it a little bit less positive experience for the user. Are they losing loyal customers who are finally just like, how much more are you trying to take from me? Or is it just such a loyal consumer base that even though they're kind of being abused at this point, they're just still coming back?
Well, I hate to be this guy, but I think it's really a mix of both.
William.
I think that we're kind of getting to the point where they're really pushing their customer base to that edge. So as a potential investor, or if I were a shareholder in Starbucks, my question for management would be, it seems like we may have squeezed everything we can out of our most loyal customers. What are we doing to draw new people in the door? Because this brand is not generating excitement. It may be delivering fairly well for those who are already kind of addicted, already have it as part of their normal day-to-day routine. But what are we doing to attract the new customer, to make people excited about our menu, about our offerings, about our brand? And right now, I don't see very much on the horizon for Starbucks. And I'm concerned that management might not either. And it may be more about managing some store closings, managing the store openings that they have, too much focus on international expansion, especially China, It feels like that big 3/4 of the revenue chunk of North America is kind of gotten stale. And I feel like that goes for a lot of fast food restaurants in that quadrant. Just feels stale. What is next? What's the next big thing? I don't think anybody has a great answer for that.
Well, they're trying that, what is it, olive oil infused stuff, and I think that's already fallen off the cliff at this point, Andy, as far as popularity. But if you look at this from a
He predicted a large squeeze in 2024.
Like maybe it's a staple. People still go back there and they'll spend more per
I've got to stop
which is
on Mullen.
Their margins at this
It's
point,
further down though. Down, it's like down here. It's probably too low.
What kind of earnings score are you? Do you guys have?
I'm giving it plenty of room to breathe.
Yeah, happiness levels down a little bit.
Too much,
This
really.
is one of the best run companies in the world, so I don't think that this is, any huge red flag. I just think it's one of those stories where you kind of wonder what's next, wonder how they're going to generate excitement around shareholders. So we have a slightly bearish outlook.
I mean, if barbecue is still, if that's still a ticker,
to be any impetus to get excited,
and they're not bankrupt or liquidated, I guess, then yeah, probably could squeeze.
Yeah, and stock is reflective.
I mean, you're gonna have squeezes.
In 2023.
Look at
All right, great
look at
stuff.
all the
Great data as always,
zombie
Andy.
stocks,
Have a
the
great day.
seller box stocks.
That's Andy Swan.
They drop
like folio breaking
the
down
fractions of a penny
what?
and squeeze thousands of
Commentary
percent
data
to
kinda matches
1
up with
penny.
What's going on in the stock this year? Up 1%
Just another
so
OTC
far,
stock now.
Alex. But if you look at their profit margins, were up to 14.1% of sales last quarter. That was 12.4% 2 years ago. So they have, helped themselves as far as profit
What a
margins
choppy
go
day on
because of
SPY
that
so
higher
far.
average ticket price. But
This
you know,
is just
with
data
their
farming
data
dream.
and China
MSGM's
still not
halted
in
again.
full recovery mode, is this
Wow, break out of that level.
the stock setting up for that, or how do you want to look at this from an example trade?
Well, what I would say is that I think that we have just kind of watched Starbucks, and I've already kind of thought of it as a mature company. It's not really a growth-centric company, but it had, of course, ventured overseas to try to spur growth elsewhere. It did, of course, really lean into the breakfast items to expand those average ticket prices the last few years, and that's sort of where they got the growth. It wasn't necessarily new customers in the door, as Andy has said, and it has in some ways then kind of transitioned into this gray area between a discretionary item that it's selling, but kind of consumer staple like performance, consumer staple like reliability. And so I looked at a strategy that sort of, I guess, follows this general conversation that we've had, which is it feels like there's this core consumer base that goes to Starbucks. They're getting squeezed maybe more than they want to, but they're still going. And that almost puts a floor into how bad the report potentially can be. Always room for surprise, of course. China may be that surprise. But what's the excitement right now for this? And I think that was Andy's point. So I looked at a strategy that is somewhat omnidirectional, but leans into the fact that Starbucks has been a pretty consistent, well-run company throughout the years and consumer staple-like. And so this is a strategy that you would use potentially to acquire shares at a lower price if you were interested, or potentially just look for sort of a small downwards move in order to kind of find that sweet spot on this trade. So we're looking at a 1/2 put ratio spread. This is a strategy that does contain an unkind of covered cash secured put here, in which it's going to cost a little bit more to do this strategy. It's going to have a little bit more risk, but that risk is really becoming a shareholder in Starbucks. So for example, we're looking at the August monthlies, buying one of the 101 puts, selling 2 of the 98 puts. At the time before the show, this was all out of the money, so I would probably shift these strikes down now at least $1 each. But at the time it was a 50-cent credit. I'm sure that has ballooned a little bit on this. And the idea is that you create a break even that is outside the market maker move. It's below the current share price. But because there's that embedded long debit spread, Tom, the best case scenario for this, although it's a neutral to bullish strategy, is at a price lower than where the stock currently trades. And I love that about this type of a trade illustration, this type of trade strategy, is that it does have some omnidirectional elements to it. It's neutral to bullish. I take risks to the downside, but my best case scenario is a price lower. This is the kind of strategy you would implement in a scenario like we're describing, which is maybe it's going to disappoint, but maybe that disappointment is limited to how far the downside is. And so if it just eases to that short strike of 98, this thing can expand to as much as 350 as we have the numbers on the screen.
All right, yeah, let's walk through this back ratio spread. Buying one August 18th, so it's not a pure earnings play. You've got 17 days till expiration on this one. Buying one of the 101 strike puts, selling two of the 98 strike puts. You're collecting a credit of about 50 cents on this. We've got that on our example here. It's trading closer to 65-cent credit now, so you can get a little bit more there. But if you collect a credit of 50 cents, it takes a break even down to $94.50, which is $3.50 below the 98 strike, where the apex of profitability is, where you sold those two options. Alex mentioned this has got that short naked cash secured put here, so your risk on this one about $9,450 if the stock were to go to zero somehow. But above that 101 strike that you bought in this strategy, you can still keep that credit that you collected. So this is the type of strategy that says, hey, I'm comfortable owning the shares if I stay short that extra put through expiration and it's below the 98 strike. Your break even $94.50 on that one. But if it does go up for some reason after earnings, you're still going to be profitable, although muted at that point, only $50 per spread. So a good look at 1/2 back ratio here on the put side in Starbucks, expecting maybe the stock to kind of stay where it is, grind a little bit lower on this one for profitability. You do have some, as we mentioned, some assignment risk on those short options going into expiration over the next 17 days. All right, we're going to take a quick break here. When we come back, we're going to talk Qualcomm, which is up about 19% so far this year. The company reports earnings after the close tomorrow. Automotive sector and chips has been doing really well. That's one of their sectors that they are prominent in. Fast Market's coming right back.
SGM resumed there, up almost 100%. Whoa, thing's explosive. 110. Took the long there. MES. S&MP? I'm not sure, man. They had a crazy run though. It's just been halted this morning. I think it's trading now. Yeah, 35 cents to $13 since 2 days ago. That ain't bad. Had a reverse split. Oh, it got uplisted. So it was on OTC. It just got uplisted. That's interesting. It just delisted, it looks like 2 months ago. So I think it kind of works. I think kind of like a, I don't know. I think it kind of works like an IPO on here when it gets uplisted. Wasn't out that long. Too soon. Oh wait. But maybe not, I'm not too sure. Maybe that's just secondary offerings that I've noticed under the IPO. But yeah, if barbecue could get uplisted, it might have a move similar. Yeah, this is where it got delisted right here. Right here went from $2, got delisted, went down to 54 cents, and 35 cents was the low. And then it started rallying. You would have had some warning. Started breaking the highs, volume started coming in. This is all before it got uplisted. I think today is the day it did. And look at end of day yesterday. Yeah, we weren't watching yesterday. I know those bots have mentioned it before. But it depends on where they mentioned it. Did they mention it when it was back here or here? Or... But yeah, yesterday you can just see halt. Halt, 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 halt. Halt. I don't know what this is. Yeah, that's still yesterday. Then the gap up. Now it's leveling back out at $10.
Now, if you look at the estimates for Qualcomm, the estimates for earnings are expected to be very low compared to last year, $1.81. Last year, they earned close to $3 at $2.96. So they're expecting 40% decline in earnings on an adjusted basis year over year, with sales down 22%. 8.51 billion is the number estimated for sales. Compare that to last year, the nearly $11 billion. So again, it's down 22% year over year for Qualcomm. So I think the bar is set low for Qualcomm. If you look at the stock over the last 52 weeks, it's down 10%, which is kind of remarkable considering some of the movement we've seen in major semiconductor names in the industrial space, like ON Semiconductor, Texas Instruments, both in digital and analog chips. But at the same time, we know that NVIDIA and, of course, AMD, which is reporting as well, have performed in the environment. And Qualcomm, unfortunately, has lagged. And I think it may be, considering some of the
MSGM's halted again, back to the downside.
To Apple. They essentially provide Qualcomm, Apple does, about 20% of their total revenue. So That's always been an issue with Qualcomm. But
Issue?
at the same time, the
Say
actual
issue?
revenue exposure to Apple has declined over the last year from around 30% now to about 20%. So it looks like they're making some headway into removing or reducing the Apple-centric risk that they have with their licensing technologies.
Yeah, George, when you look at this, you know, the
I'd like to see
partnership
Mullen
that
bounce
they've got
here.
with Meta real quick here, that large language model, they're going to put it on mobile phones, compete with ChatGPT. Is that something that, you know, guidance-wise could be a benefit for them?
Definitely. I think that analysts will be looking for that because you have to consider, you know, Qualcomm's growth, especially in the last year. I mean, EBITDA in the last year has been flat. For the quarter, they're expecting quite a low one, and this is the lowest out of the previous 3 and, of course, the next 4 based on estimates. But even sales are down compared to where they were 5 years ago at around 4.6% year over year, or 5 years ago, or 5-year average is around 15%. So they do need a growth catalyst, and I suggest that what you mentioned with artificial intelligence in partnership, conjunction with Meta platforms, may be a catalyst to sort of increase the expected earnings, but also expand the multiple, which is quite low right now at around 12 times earnings.
All right, great stuff, George. Great backdrop for us here on Qualcomm going into earnings tomorrow after the close. This is George Tillis, Senior Markets Correspondent. Now, let's get into an example trade here in Qualcomm, as George mentioned. From a year ago, levels down 10%, so it's severely underperformed. So I looked at a strategy. If you're thinking that maybe earnings provides that catalyst to the upside, we've got one here that takes advantage of that as an example. But going out to the August 18th monthly cycle, so 17 days till expiration, so not a pure earnings type example that we're looking at here. We're going to buy an unbalanced call butterfly to the upside, and the layout of it is you buy one of the August 18th 130 strike calls, sell 2 of the 138 strike calls, which is just about what the option market's pricing in as far as a 1 standard deviation move. So you're selling 2 of the 138 calls, then wrapping it all up by buying 1 of the 140 calls, paying roughly about a $2.80 debit for that. That's going to be your risk on a $280 per spread. That break even to the upside, 132.80 on that one. That's only $1 higher than the current share price in there. So you don't need a massive move in the stock to take advantage of that. You see that apex of profitability there. That's right at or near that 138 strike here, where you get the most profitability on this one. But the profitability does drop above that 140 strike that you're long, where it's basically a double at that point. But an inexpensive way to play to the upside on Qualcomm going into earnings, maybe going up to that 1 standard deviation move, while also giving yourself a little bit of time on this one, as you've got 2.5 weeks until expiration. So going into earnings, you can take advantage of that move higher if it does go there, but then also you've got time in case it does go down or stays where it is and rebounds, and that risk on that is what you pay, about $280 per spread. All right, that's going to do it for us here today on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up next.
Gooder. I do. Yeah, I feel good. Cough is just clearing it out. So I've actually felt fine the whole time. It's not really one of the signs to me that's like a COVID. Just that it's weird and different and fake feeling. Back in the long there. See if we can climb back up to high of the day. Or even yesterday's high. Oh, MSGM resumed at VWAP. Bad. SPY's climbing up there. Got a little resistance here at 456.30-ish. And 456.60 is VWAP. Crazy consolidation on S&P. That move. All right, sounds good, Psych. Yep.
Alex, we are seeing some choppiness today throughout the market here. Initially, we were lower. Now the NASDAQ trying to make any sort of degree of comeback along with the Dow, which is slightly higher, if not unchanged on the session. So it does feel like right now we are holding our breath till we get a lot more of these.
It broke through that resistance.
Really ramping up today after the close into tomorrow.
I'm paper trading my options now since I already used my trade.
We're watching very carefully when Apple and Amazon report in the afternoon.
Yeah, some kind of interesting movements in the bond markets, I think, that are leading to a little bit of the weakness. You see the 30-year and the 10-year treasuries both selling off quite substantially, meaning yields have gone higher. We know that stronger dollar, higher interest rates generally over the last couple of years has been negative for stocks. There was a period about a month and a half ago where that correlation had flipped, and the fears were more about economic downturn and less about inflation. But the last few weeks, it's been more the interest rates higher, stocks lower regime, and we see a little bit of that today. 15 points in the S&Ps, 30 points in the NASDAQ. I said this on Fast Market, is just not what it used to be. We're used to seeing those numbers, seeing that as a down day. It's 0.3% in the S&P 500, and it is about, let's call it 1/6 of 1% in the NASDAQ 100. That is just not much movement at all.
And that's exactly how I would characterize today's price activity so far. It just feels like a bit of a nothing day, but we do still have a ton of events to get through. Obviously, earnings focused today after the close, which is how we'll be kicking off our show here with our upvote and downvote segment. Then charting and trading those upvotes. Our FOMO discussion today is all things AMD. One of these names reporting after the close and also getting a nice lift higher today, up 2.5% into those earnings. We'll also be previewing Pinterest, which reports today after the closing bell. Last but not least, looking at the monster move to the downside in JetBlue, although recuperating some of those losses, but still down about 7 7/10% in reaction to some disappointing guidance.
Pinterest is always a fun conversation. Yeah, the JetBlue move is certainly one that is a little bit eye-popping today as the stock is down over 7.5%. And really the message that they sent was, pretty, let's call it pessimistic, but we'll talk with George about that. I'm looking forward to that conversation. See if it's a JetBlue story. Is it the customer base of JetBlue that maybe differs in some of these bigger airlines? We'll have that conversation at the end. But let's do upvote, downvote, not endorsements, not recommendations. First one is, I believe, the first time we've ever talked about this name particularly, at least on this segment, and that is Macroeconomic, a name that many know and are familiar with, especially next generation investors. You got a lot for us on this.
I do, because this name has that key crypto exposure. So for that reason, we have seen shares rise 204% year to date into this report today after the closing bell. And we are expecting their second quarter performance to have benefited from the increased demand for their on-premise and cloud software solutions in the crypto space. Earnings are expected at around 72 cents per share, which would indicate over 100% growth year over year. On revenue expected at around 124.8 million, which would also signal about 2% growth. Now, some strength in their enterprise BI platform and their expanding clientele are also expected to have driven their second quarter top line, as well as some continuous product innovation and partnerships
Lottery about to break out
that have been noteworthy over the past 3 months. They've been transitioning now
into
a subscription-based revenue model, which is expected to
see if they can break VWAP first.
Establishing some high-quality annual recurring revenues and scalability in the to-be-reported quarter. The company's Bitcoin strategy is also likely to have remained strong given the maturing digital asset environment and improving regulatory environment overall in the crypto space. So that is seen as a tailwind here, but I also think when you're exposed to Bitcoin, that could also, at the same breath, be somewhat of a headwind. We are seeing Bitcoin futures down about 0.7% on the session, actually almost in line with the move we're seeing lower in MicroStrategy today. But this name has been on a tear. It's up 224% off its 52-week lows.
You know, Jenny, as fun as it is to talk about the core business for MicroStrategy, this is essentially a way to invest in Bitcoin. I mean, it's not perfect, but it's essentially a Bitcoin proxy. They own a ton of Bitcoins, and so it ebbs and flows with Bitcoin. This, of course, the Michael Saylor-led firm, notable Bitcoin kind of perma-bull, if you will. I don't know if there is perma-bulls in Bitcoin or not, but certainly a believer in the technologies. That's what this is. This is a ebbs and flows with Bitcoin story until otherwise noted, until they potentially divest some of those Bitcoin investments. That is what this is, and I think if I recall right, maybe you'll have that, but the average price that they own Bitcoin is like right around here. So it's not like this has been a profitable investment over time either.
I know, and I was actually shocked to see that we were seeing the street expect profitability, and this name has actually posted several quarters of profitability, because I would have said the same thing. They are expecting things to sort of remain exactly where they are right now. So this name, I would say, is exposed to some volatility and also added risks, just given the crypto market and the sphere in which it operates. But still an interesting move on the year, no doubt, falling in step with a lot of the outsized performance we've seen from names like Riot or Coinbase. Our next name today, though, is Electronic Arts, which has not been somewhat of the outperformer on the year. It is up around 12%, so it's not like it's lower, but only up about 25% off its low and down about 3% at this point from its high. Now, their first quarter earnings are expected to have skyrocketed around 215% to just over $1 per share compared to the earnings of 32 cents they reported a year ago. First quarter sales are also projected to climb around 22% to $1.59 billion. Now, they're expecting, or they're hoping, to regain some of the mojo they received during the higher gaming era of the pandemic, as their annual earnings are expected to climb 20% in their current fiscal year and rise another 10% in fiscal 2025. Earnings estimates are modestly higher, and they do offer around a 55% dividend yield in an industry that is very much focused on growth, less on those payouts. So that is, for some reason, this name has a leg up over some of the outperformance we've seen, and Take-Two this year has been on a tear ever since we heard from all things GTA, the 6th installment, I believe. That really sparked a lot of intentions. We'll have to see if EA can sort of excite investors again now into their first quarter print here. Activision, which has its own price activity and its own ways that it moves, obviously, given the potential Microsoft acquisition, that name's also outperforming EA. So this name needs to give its gamers and its investors some love here.
Yeah, weak launch of its Formula One game, I think, is something that will be in focus thus far, but net bookings are kind of anticipated to be on the higher end of the guidance that they offered, so that could be a start if that's the case. And then obviously continued optimism looking ahead is going to be critical for these names. I would say that they ebb and flow together, but there's certainly winners and losers within the space, because in some
Afternoon,
ways,
Jay.
it's not entirely winner take all.
Do you want to go?
Play one video game at a time.
DFV
So, there's a really
tweet about it this time?
game. The developer of
or delete his YouTube video on it?
There to reap the benefits, so all the others are kind of stuck playing for second or third
Yeah,
place.
chart doesn't look too bad.
So, important to see
Cartoon Studios.
the Legends brand that they have under their maintain some of its momentum. But I always associate this, and I'll never probably forget kind of the beginning when you would turn it on, but the EA sports in the game that it would say every time you turn on the sports game, I will never forget that. It's like forever ingrained in my head. I haven't played one of these games probably 5-6 years.
I always affiliate EA with The Sims, which I played like forever when I was young. I mean, actually, not even when I was young. Recently, even the EA, for that reason, is ingrained in my mind, although I do not think that is their bread and butter in terms of earning actual cash. But our next name today is Zillow, which is actually, of these four stocks, the second best performer on the year, up over 70% since the start of 2023. And clearly, as you can see there, our best performer of the session, up about 2% now in real time. And this name is exposed, obviously, to the very difficult to navigate right now housing market. After record-breaking growth and price activity in 2021 and 2022, the housing market has largely settled and has avoided this so-called crash, but challenges do still remain. Home values are growing in line with pre-pandemic norms, which is a path that Zillow forecasts will continue. Rent, they said, is now back to a perfectly average growth pace after its pretty wild ride. But buyers are finally finding this market more costly, more competitive, and one that has been more difficult to then budget for. So for that reason, we've seen a lot of buyers staying put, which then hurts a name like Zillow. Today, I think will be very telling on what the housing market looks like, and a lot of these homes that we're seeing not being sold. It's right now some major supply story here that they're just not seeing the same amount of homes on the market. What does that look like
I'll reload
for
maybe
the rest of this year? But it's hard to argue with this chart. It was touched 52-week highs earlier in today's session. It's up 112% off their 52-week low. So you look at this and think there isn't a supply issue, there isn't a demand issue, things look great. And so that's why I think these earnings will be a key focus, because we have started to hear from some of these home builders just affordability is a major issue. How does that impact a name like Zillow?
Yeah, this is a really interesting conversation on a macro front, because I was actually just looking at something this morning in a place like London where they have variable interest rate mortgages, aka it ebbs and flows with the marketplace. They have seen housing prices come down tremendously. But here in the US, we primarily have fixed rate mortgages. So if you went out, prior to rates coming up and locked in that 2, 3, 4% mortgage, you're kind of incentivized in some ways to stay where you are. And so in some ways, it's almost counterintuitive. We would have thought higher rates would have been more, potential
You're in North Korea?
pressure on housing prices to bring them down. It's actually done the opposite,
Really?
because it's incentivized those who are in a home already to
You're allowed to have
stay
internet?
at home. As you said,
Hearing's at 2 o'clock.
so then those who
Afternoon,
are
Zoomy.
going out and selling their home or buying a home just have less to choose from. That's actually pushed prices higher. So it's super fascinating.
You've been making such boring
the
moves.
part of actually looking at Zillow themselves, how do they fare in this? Well, they've been spending a ton of money internally on sort of initiatives.
Exciting might not be good.
So that might weigh on some of
Barbecue.
their
That might be
margins.
like a race to zero.
Revenue is expected to potentially be in the upper half
I'd
of the
say
guidance and sort
boring
of
is good.
consensus.
You've had a
So if they're able to do that, kind
big
of
uptrend.
navigate these
It's
tougher
OTC.
waters, some of those initiatives they've invested in over time as they've sort of changed their business in the last few years can potentially reap the rewards.
We're going to listen to
Once the housing market does
the
somewhat
bankruptcy court
normalize,
hearing in 45 minutes.
If we get rates
I don't
entrenched
have
around
news.
this level, they're not super volatile. At some point,
Maybe we'll hear something there, though.
you got to go get that new house, and the supply problem will potentially work itself out. But if rates start swinging around again, who knows?
I know, and I think we keep waiting for things to normalize. I, even as a renter, keep waiting for things to normalize. I think it's funny they said that things were more perfectly average in the rental space, because that has not been my own experience, at least living in the Chicagoland area. But our last name today now is Match Group. And Match Group is actually expecting some significant losses on a year-over-year basis as far as its adjusted earnings go, expecting adjusted earnings at 45 cents per share, which would represent a decline of almost 50% on a year-over-year basis. Revenue is expected to climb around 2.5% to around $814 million. But their second quarter performance is expected to have benefited from some continued momentum at Tinder, as well as solid performance from other apps like Hinge, Pairs, and OkCupid. Tinder and Hinge, though, are really their bread and butter, expecting to contribute to their top line. They're always their growth behemoths. In the first
Wow,
quarter,
that's crazy.
their total number of payers increased around 10% to 16.4 million from the year ago. So we're seeing still healthy levels of growth as this company
Yeah, it looked like it was flattening out a little bit today.
and a lot of machine learning.
Oh, look at that. It's green, 4.5.
More proactively identify and prevent and eliminate
Already getting this crazy OTC
of services. They're expecting
volatile range. I think it was down like 50% this morning, wasn't it?
in the to-be-reported quarter, which I thought was a fascinating metric. And they also did just introduce their latest app called Archer, which is the first social media app that's designed for
Down 24% today.
services regarding men specifically.
Now it's up 4.
So the launch of Archer is expected to have boosted the number of users in their to-be-reported quarter. They also just introduced this new feature called 72 Hours, which is where it's time-sensitive dating. To me, this sounds like the most stressful thing of all time, but that was something that was unveiled several months back that they've seen then intense engagement as a result. So this name is interesting because when you break down the components, Alex, they're doing a lot to then please and gain new consumers. I just think it's a different world right now. We're not operating, back in our houses. We're not locked down. The need for some of these online dating apps is not as strong, but we'll have to obviously see when they report their earnings today.
Yeah, there might be real, outside of the app competition that has returned the last few years, but this is a market that's not going away. However, you need people on the apps for them to be monetizable. So there is kind of this counterintuitive incentive misalignment when it comes to these social type companies, be it a dating app, be it a social media company, where showing advertisers how many views that their ad gets is obviously, it helps if there's some spam accounts, let's say. However, if you're on one of these services, or if you're on, it's Instagram or a social media company, and all you see is bots, your experience is no good, and you want to leave. And obviously, in most cases, I would assume that the bots and the spam accounts don't actually buy the products that are getting advertised. So it will misincentivize the ad purchaser from going on there as well. But how many different ways can you reinvent the wheel? I mean, 72 hours now. They got to do stuff to make it cool and fun and different. But there's just not that many more things to come up with, as far as I can see. It's pretty straightforward.
Tune to the moon.
You talk to someone, and then potentially you meet, potentially you don't. Like, how many different ways do we have to make up ways to do that?
And okay, bots to me are especially alarming. I can be okay with like the bots that are all over Twitter/X, whatever we're calling it, or Meta or Instagram. But if you have bots on dating apps, to me that completely loses your credibility. Dating apps are already horrible as it is. I do not want to be meeting bots on Match.
I'm going to be honest here. We got to put our foot down. No bots anywhere. We just want real people. And then we don't have to pick and choose where bots are okay and where they're not.
Yeah, my bot threshold, I think, that's pretty low, but no bots on Match. They need to completely fix that problem. But we'll be diving more into our two upvotes today, those being EA as well as Match. We'll be discussing more on Rick's thoughts on the bots as well as the technical levels. Stick around. Next Gen Investing, we'll be right back.
My goodness, William. Not advice. Just a bot. It's guaranteed to run like y'all on top. When did BCS become because? Because too hard to spell? Hey, Benjamin. Bonjour. Bonjour. Bonjour.
A lot of the sports games, Apex Legends, some other ones. Maybe Rick will be able to help us with that.
Good French, thank you.
Do you think Rick is our in-house
Because you're old.
video game expert, whether he wants to be or
No,
not?
I asked when did
EA
it become too
since
difficult
from,
to spell.
2005. So now here to tell us more on the technical.
Nothing to do with my
I'd like
age.
to welcome in our chart master, Rick Ducat. So Rick, we'll be starting things off with EA.
Too difficult to spell?
It's been a relatively okay performer this year, and that's selling it. It's up about 12% this year. Not seeing the same outsized gains as some of its other video game peers. So walk us through your thoughts here ahead of their earnings.
I do love video games, but I gotta say I don't really play as much ever since I have 3 little kids. So you know, it kind of cuts into your video game time, this whole parenting thing sometimes. But the chart is doing okay. We're up about a small amount in the year, about 4% or so. And it was interesting pricing. We had a large drop downward around earnings in January here. We hit our yearly lows near 108, but then we recovered all the way back up. We wound up outpacing ourselves, our earlier highs here on the year. We hit some highs near 140 recently. However, we had trouble cracking above that area. You can see that red dashed line near about the 139.50 mark or so. That represents about where we had our best close. You can see that the general shape of the price action has been more of a rising wedge type pattern here, with two trend lines converging toward each other, not quite parallel. It's a rather mild slope for us to be converging toward each other, but they are not parallel. They are sloping toward each other. So we can see as well that while we were making this climb upward, we outpaced our moving averages that we follow: yellow 21-day, orange 63-day, purple 252-day. We also rose above our volume profile point of control. That's the area of heaviest trading in our time period. We also saw that we formed a volume node at these elevated price levels, an area of heavy trading. So it suggests that there was some conviction on the part of traders even at these relatively high levels. One thing that may give some traders pause, though, is that we were making progressively higher closing highs. At the same time, RSI, our measure of momentum, was trending downward and not really able to hang on to that overbought area as well, that threshold above the 70 mark. So what we were seeing there was bearish divergence, price trending higher, momentum waning. And sure enough, we did get a bit of a drop off. We recovered to an area that we had a bit of a confluence at right here. We had this green dashed line, which represents the worst close that we've had since our big surge upward there. And that was also lining up roughly with our yellow 21-day EMA. So these moving averages are support during uptrends, resistance during downtrends. In this case, it roughly held true. We touched on that area and then rebounded a little bit today. We are almost flat on the day, though, despite forming a green candle. We're pretty much at yesterday's close. So, you know, not a lot of net movement here so far. We can see in terms of support and resistance, that area I mentioned before, near 135.50, that's kind of the line in the sand to watch to the downside. Below that, 131.38, so let's call it around 131, was about where we had the highs from before we had our big gap upward. So we topped out around that area numerous times. That could be a place to watch to the downside.
BBIG is actually rallying a bit now, up 12%.
Where we had our highs from this area. That was about the site of our best close. So some pretty clear-cut areas to watch for potential breakouts.
Yeah, and I think this name, like you said, Rick, just being sort of not interesting, but it's also not falling. So I guess right now just sort of...
Guess this would be the time to close a short.
Not necessarily super negative here, just not giving the bulls a lot to work with. But with that in mind here now, Alex, walk us through what you're thinking for an example trade, just leaning into the fact that this name hasn't been doing a whole lot in the last several weeks.
This is a 35% intraday move.
Sort of standard post-earnings reaction.
NBD for OTC.
$5. Stock was about 136. We had just kind of fallen from just over 140. I used a call calendar for the trade illustration targeting around the 141. So sort of just looking for a slightly positive, sort of in line with market expectations and market one standard deviation ranges reaction to the upside here. 141 call calendar, sell this week, buy next week. 25-cent debit means only $25 in risk. So also sort of a aims, small, miss small sort of an approach here. Because we know, Jenny, if you're not able to project properly as the risk profile will show, there's risk in both directions. It has risk of overshooting to the upside, and of course, any move to the downside on a short-term calendar like this really faces a pretty high likelihood of potentially losing the entire 25 cents. So $25 at risk here has a chance to potentially turn into a multiple of that if you're really, really spot on in the projection. But it's super customizable. I think there was dollar-wide available strikes. So more bearish, more bullish, more neutral. There may be a strike within those 2 weeks that better reflects a different outlook.
Yeah, I think that's really well put. And now to shift gears here and look at a name that's also seen similar price activity on the year, relatively lackluster, but is expecting some weakness on a year-over-year basis as far as its earnings. So Match, and Rick, I know you're our success story also when it comes to Match. You met your wife on one of their various platforms. So you are a success story today, whether it's video games or the online dating. So walk us through what you're seeing.
Sadly, for the purposes of this segment, that means my knowledge of these apps is about a decade out of date, though. So I am definitely not up to speed with the latest apps in this area. But looking at the chart here, we can still see that there's some interesting movement that's been happening recently. We can see that we had a long-term downtrend in this name, starting with those yearly highs. And remember, this is a name that's down about 74% off its highs near 182 a couple years back. So it's been a notable decline in this particular stock. But we can see, nevertheless, we did break through this longer-term downward sloping trend line in blue here, trending upward off those yearly highs. Now we're up more than 50%, from the yearly lows. We're up more than 50% from those yearly lows near 30.73. Once again, forming more of a rising wedge type shape. Two trend lines that are almost parallel, but are indeed slightly converging toward each other here. We can see that since we've broken out of our trend line there, we crossed above our yellow 21-day and orange 63-day moving averages right before we hit that point. We've managed to stay above them. Our 21-day EMA has been supportive the last couple times we touched it. We also cleared above the volume profile point of control near about 42, this thick red line once again. And this area on the volume profile study, it can be a point of support or resistance. So it's notable when we do cross above the area of very heavy trading on the chart here. It suggests that perhaps the trend is changing. There's a new trend forming here as we break above that point. Now we can see we're closer toward the bottom of the pattern here. RSI, our measure of momentum, reflecting that price is kind of trailing off a little bit. We are still above the 50 midline here, but not by much here. We've seen some declines recently. Note as well that our yellow 21-day EMA starting to flatten out a little bit. So this is a short-term warning sign that perhaps the trend is starting to die down a little bit. The intensity is starting to wane here. So we can see now that in terms of support and resistance, we have the luxury of kind of two rather clear-cut areas to be watching. The first is our 21-day EMA, which is roughly in confluence with our lower trend line, coming in right just below 45. So around the 45 level probably would be a pretty good approximation of where those two are coming together. To the upside, we've got our purple 252-day EMA.
That wasn't nice of you.
Right on top of our upper trend line there, so around 50.75 or so. So we've, when you look for these indicators to line up with trend lines, it can add an extra weight to these price levels. So those look like some noteworthy points to watch as we head into this example trade.
Yeah, and like you said, Rick, well, we are seeing some overall weakness here. I mean, down pretty significantly, like 74% off of its highs. We have rebounded quite substantially, like 50% since those lows. So now finding that middle ground is something that's important. And this name also doesn't typically move with a ton of volatility, which is something to consider now into this earnings, but we will leave it there. Appreciate the breakdown of the charts and of course some personal experiences. Rick Ducat, our chart master. So now trading this name, Alex, considering that actually on a year-to-date basis, these names look very similar, but Match trades typically with less velocity than EA. Walk us through what you're thinking.
The stock's lost a lot of its value from its peak a few years ago of around 182 to the upside. So keeping that in mind, that although it's had decent performance thus far this year, it has a long ways to go to get back to those levels. You talked about some of the things in the prior segment that are driving kind of attention right now from this company, from removal of potential spam accounts to increasing users through creation of new apps within their family of apps. But when it comes down to it, this is still a pretty core thing for many Americans and those around the world in terms of meeting people. And it's not really a technology that I think many anticipate going away. So I looked at a neutral to bullish strategy, sort of leaning into that idea that while they're going to ebb and flow with the seasons, if you will, it's still a pretty formidable player within the online dating space and these dating apps, mobile friendly apps. And so looking at a short-term August 4th weekly 44.42 put vertical, if we could collect somewhere
we get a break here.
That would be a quarter of
the upside on less buy.
3-to-1 risk reward ratio with a 43.50 break even. And so that would be about
MSGM holding up to
$3 below what
82%.
we're currently trading, just inside that market maker move. So
BBIG,
this would be neutral to bullish,
12%.
and leaning into that bullish aspect, but
I don't know what it's called,
does
but
have a little bit of
I guess it's
cushion
just called
in
math.
the event that this stock just modestly disappoints as opposed to
recoup losses,
collapses.
you need much more
post-earnings. Even in the
percentage.
event that it does have a downwards trajectory, it is risk
It always
defined.
blows
You know
my
the
mind.
worst case scenario going in this case it's $150. Elongated Z risk
This
profile, we
dropped
start in that max profitability
89%,
zone. The
right?
credit received is the max profit, not accounting for the
What
transaction
are that?
fees.
46.
And
Dropped
again, find
89%
break-even
from that
simply take
$5.
That credit away from the short strike. So
At
straightforward look,
49.
can be customized. You want to get a bigger credit, you can be more aggressive in that strike selection or increase the time to expiration. But of course, that always comes with trade-offs. Maybe that decreases the probability of success. So whenever these option strategies,
To get that back, you need 1,037%.
inputs, you change something else in terms of probabilities or risk or reward.
Don't hold on to your losers.
You have to be in the trade. So it's always fun
Kill
to kind of
losers
mess around
quickly.
and play with things until you get to something ultimately that better fits what you want to see happen.
Absolutely, I think really well put. And of course, we'll be watching both of those names when they report today after the closing bell. Also important to keep in mind for both of our example trades, they do contain multiple legs that could lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now, coming up next, we will look at another name that's reporting earnings today after the close, although seeing some positive price activity into that event. That is AMD, with shares up 2.5% now into those key earnings, one that we'll be watching with its 80% run up this year.
I know. TUP has earnings tomorrow, so it'd be stupid to buy right now. Unless you're just going to intraday scalp it. I thought about getting puts for their earnings. The IV's 500%. Yeah, I stopped out. I closed out that long. Back to chop.
than what this means for some of the bigger names like a BYD or Tesla.
Well, we will get Tesla's numbers here, especially for China, in the next couple of days. So we will see what the impact is when it came to the price cuts and if we do see a spike in demand here. But we also have to kind of keep in mind these two companies compared to some of the
How
other
true that is.
that are not as big. The comps are meaning the comparisons on a year-over-year basis are just not going to be the same as a Li Auto that's really just getting their footing when it comes to delivery and production numbers here. So I think you're not going to see a huge impact or a negative impact when it comes to Tesla or BYD, but this is actually a really good sign that maybe we are starting to see demand pick up in China after these price wars are starting to get customers into the door, and we are also seeing and hearing potentially some more incentives coming down the line here when it comes to China EVs.
Yeah, Kevin, I completely read this also the same way, that this is a broader picture, broader definitely hope for the Chinese economy, which has since been so disappointing in some of its recovery, especially with these EVs. So I take this as a positive. I know that price activity isn't seen across the board, but Li Auto at least making a nice move higher today. We will leave it there. Appreciate the breakdown. Kevin Green, Senior Markets Correspondent for the network. And I'd like to bring back in Alex, and it's time for our FOMO segment. So we're talking arguably the biggest earnings event of the day. That is AMD when it reports after the close, and it's held on to a nice 2% gain all day long.
It has. This is going to be a fun earnings announcement because it's going to be so much driven by the conversations with the company leadership and their outlook going forward. This particular quarter that's being reported, they're going to show declines in revenue, declines in earnings that are substantial. The only segment that is projected to show growth is the embedded segment, which of course is a much smaller segment for them than some of the others. So this is all about the hype. This is all about what can you tell the street about the meaningful dollars and cents that are potentially out there driven by AI. They're expected to bounce back to growth next quarter. But we know what led to the giant NVIDIA rally. It was a massive guidance hike, way above the expectation. We'll see if AMD can do the same.
I know, I'm curious if there's some risks to that massive guidance hike, because now some of these expectations I think have gotten a little bit ahead of themselves, and obviously we'll have to wait and see once we get those numbers. But right now it appears that your stock is being punished if you aren't able to please this high bar of expectations for your guidance. At least that's what we've seen so far. Now, Susquehanna Analyst, I was reading their note on AMD ahead of the report saying that investors are appreciating their long-term opportunities in AI, even with some of these near-term headwinds. As we are seeing the street expect AMD to report revenue of around $5.3 billion, adjusted earnings expected at around 57 cents per share. But this analyst from Susquehanna did reaffirm his positive rating, but lowered his price target to 135 from 145, still clearly implying some nice upside from here, but saying they face a near-term amount of these headwinds and an elevated data center expectation, which then puts these estimates at risks. However, long-term, they still really love this name, given its opportunities into AI. AMD as well as Intel both use these 86-chip architectures in making processors that act as basically the main computer brains for PCs and servers. There is also the expectation that we've seen now this bottom, or we've hit a trough in PC and server demand. So we could start seeing that interest pick back up, but that hasn't necessarily been the case from some of the earnings events we've already gotten. So we'll have to see if that is, company-specific problems, or we actually are seeing this bottom here in demand, which has been weighing on both AMD and Intel. AMD, though, looking quite different than Intel on a year-to-date basis, not comparable at this point. It's up 81% this year. It is down about 12% from its highs. It's fallen a little bit slightly over the last several months, but still up 114% from its lows. So this has still been one of the best performers in the tech world this year, Alex.
Yeah, the question as we go in now to the second half of the year is this projection of optimism. Is it actually going to happen?
Back down here.
Or are the numbers of now
back
just
into the chop
actually
range.
What the numbers are, which is disappointing and declines from, kind of the post-COVID boom for a lot of these companies? Time will tell. One thing's for certain, though. This is a retail favorite amongst trading. This has always been one of the most actively traded stocks as far as I can remember. Crazy amounts of stock share trading, crazy amounts of options volume, and a ton of volatility. Like you said, we haven't even got the earnings yet, and the stock's up 2% on a day where the market is red. This thing moves, it garners attention. Already 51, almost 52 million shares traded. Again, we haven't even gotten the earnings announcement yet. So it's clear to me the fear of missing out today in this name is to the upside, especially given all the AI hype. So we looked at a strategy that benefits potentially from an upside reaction in the stock, which does have about an $8.40 market maker move. We know that's a 1 standard deviation range. It is by no means a limit, but let's say that that kind of targets around 124, 125. We have a strategy that would benefit from a move right to 125. Buying a skewed call butterfly here, or skewed call butterfly rather, in which we're buying a $10 wide debit spread, selling a $5 wide credit spread. They converge at 125. For a 250 debit, the break even would be 117.50 and the risk would be 250. This is a strategy that has theoretically no upside risk. The risk if the stock goes all the way through 130
maybe poison. I mean, really early. All you have is a downtrend so far.
As the risk profile will show, max possible profit at 125. You would risk giving back $500 of that theoretically.
No signs
to,
of reversal.
Make 250 where it levels off. So it risks 250
Easy parts
for
of
a
the
huge
progress.
move to make 250. So
That's interesting.
Kind of equal risk to reward. But there is that added kicker. If
Barbecue,
it just
2.3%. Little green.
125
Little
mark.
breakout on the barcode.
Expand by as much as almost 3x the original price, not accounting
Off
for
the
fees.
counter.
Break even though is slightly
I'm
higher
over the counter. I'm
than
not on
share
the counter.
price. So Jenny, you would need this stock to move up even just to break even. So
MSGM
not the highest
kept
of
going.
probability trades, but certainly
Broke out
one
to
that
that
will
next
benefit
level,
if the stock goes higher.
759.
And like you said, market already pricing at about an $8.50 move in either direction, even with today's nice move to the upsides. We'll have to be watching
And
this
7690
one.
as
Margins will also be a
resistance.
focus. If what they initially said is correct, we did hit a bottom in the PC market. What does that mean for margins in the back half of this year? But this name will garner a ton of attention. Like Alex said, it trades with some serious velocity pretty much every single day. But that does it for our FOMO segment. Coming up next, though, we'll look at another name that reports today after the closing bell. That is all things Pinterest, with a modest move to the downside today, but a name that's been fairly resilient in the social media space. Renita Young will have that preview for us coming up next.
Quick draw, McGraw. $112% on MSGM. Not much. Coughing out this sickness. A little phlegmy. Nikola testing the high there. Proterra made it back up to VWAP. Sold some more Tesla today.
it hit. However, it's not as low as that all-time low of below $19 a share.
You know, Renita, this is, we say this every
COVID?
time. To me, this is
Yeah,
it
I
is
think
a
it's that
social
like
media
COVID
company,
cough
but
thing
it's
going
got different
around.
problems than its peers. Its
It's
problem
not
is
bad,
that
it's
it
just a
seems
cough.
to have a
It's
limited
really
kind
weird.
of user
Seems
base
like
that
a
it
COVID
struggles to
type
grow. The monetization
affected
makes sense. You go on Pinterest to curate
sickness.
things, pin them to your board, things that maybe you'd want to buy. And so
Yeah, I think
links
Tesla
to
has
those,
some
basically,
haircut
you know,
to come
interactive ads
with the
always
market.
made sense. You're welcoming that, especially if you're kind of lingering on Pinterest looking for
What happened,
things.
GME?
The problem is,
I don't know.
I never logged on, and you know, I'm
Whoa.
a fan of the company.
Something
I talk
happened.
about it all the time. I talk about how great the business model
Some
is,
news
but
there.
I have no reason to go on it. They
With
gotta
volume.
find a reason to get someone like me on there, expand their user base, and then advertisers are going to come flocking. Any final thoughts here before this report?
That's fair. So I'll tell you, I use Pinterest as sort of like a virtual vision board of what I want the living room to look like when I get the furniture, what I want the movie room in my big mansion to look like one day, right? But unfortunately, Pinterest has gotten itself in a situation where it's leading people to other platforms to pay then there. So they're trying to just keep all that money in.
Yeah, that makes sense to me, Renita. And this is something I think people don't necessarily even appreciate the scope in which Pinterest is used. I use it for like
Yeah, I don't know. That's weird.
aspects like that, or like food prep. But it definitely
An
serves
unusual
a
sell-off.
wider purpose. And I need to also get onto my vision board game
With some
because
volume
I
there.
can imagine that you're a good Pinterest person to follow. So maybe I'll give you a follow after this. But we will leave it there. We'll be keeping those results on our radar. Renita Young, senior markets correspondent for the network. Now coming up next, we will
support I'm seeing, the
recap
next
the move
support
that
is
all
down
things
here.
JetBlue on
So
some lackluster
this
guidance.
diagonal line.
Details will have that news
Depending on when
story
we hit
coming
it,
up next.
will depend on how high it is, but might end up being around 20 or just over 20. If that breaks, then we have horizontal support. Oh, I guess that is at 20. Wait, what is that? Oh yeah, so it is at 20. 20 and then 18, then 15 and then 10. Those are my supports to the downside. Huh. Seems weird, that sell-off right there. Had some volume and weird. Weird little move. Up or above VWAP again. Cruising up to the highs a little bit. Looking for a little confirmation for a long entry on buy.
Recreational travel, international, domestic, big three. Southwest, we know, budget, flexibility, loyal consumer, domestically focused.
I think it could fit 15s. There's quite a few supports before there, though.
Do I associate it with Spirit, or do I associate it with something different? Like, it just doesn't service the markets that I'm
And
really in. So
barbecue,
you could tell me it's anything.
what were you saying, 18s? I think it could hit there too. Just if it breaks its next support, I think it actually go lower, probably 17s.
It's not about the cost, it's just they don't service, I think, the Chicagoland area as well. So this is, I agree, the one I'm the most unfamiliar with, but what I do know is their guidance did not please the street today. So here to tell us now more on this move to the downside, I'd like to welcome in George Chellis, Senior Markets Correspondent for the network. So George, unexpectedly, they do not see a profit now in their third quarter. Is this why we're seeing shares fall pretty much throughout the session?
Lords right here.
Yeah,
I think if it breaks this
I think
line,
there's a reason. I think Alex alluded to some of the
then,
challenges that JetBlue faces. I mean, it's an ultra low-cost carrier.
I think
It's got the
even below
drama
18, 1750 maybe,
associated with the
or lower.
barriers to the acquisition that Spirit Airlines made for JetBlue, which is held up now.
We've got this head and
with the Department
shoulders.
of Justice and the Federal Trade Commission based on anti-competitive practices.
Just needs to break the
And I think
neckline.
there's another challenge that
Or
the
to the
company is
upside.
facing. It's
Then
got a lot of
I don't think
exposure in
18s.
the eastern corridor of the United States.
Not before new
In
ups.
particular the New York area, and that area is known for a lot of log jams when it comes down to availability of terminals, and I think that's posing a challenge for this particular business. And this is also one of the reasons why they're trying to merge operations with Spirit to, of course, gain market share, reduce expenses, and then eventually achieve more consistent profitability. Now, if you look at
I'm back long there.
all looks pretty good from the standpoint of earnings per share. They came in with an adjusted profit of 45 cents, beating the estimates of 40 cents. And this compared to last year is about a 200% increase. They lost 47 cents for the same quarter last year, and also they lost 34 cents last quarter. So sequentially, this is a quarter where there's adjusted profits, and sales, which came in line at about 2.61 billion, were higher by about 6.5%. But the stock really is reacting down because of guidance that the company provided. Now, you alluded to, Jenny, the guidance for next quarter, which was down, but the full year
Nicholas chart looks nice.
is actually down pretty
He has a
significantly.
pretty good
with
upside
the
potential.
range actually widening out somewhere between 5 cents and 40 cents for the full year, where the previous range was essentially
They have earnings coming up, so not too bullish on
So
that.
that's a pretty meaningful
Otherwise,
decline in terms of
$4.40
the estimates
looks
for the full
possible.
Year, plus the range actually widens out, and that doesn't bode well for stock price performance, and I can see why the stock is trading at the downside.
You know, George, as you mentioned, this is an airline that's largely associated with sort of vacation travel from the northeast of the U.S. to, let's call it, areas like Florida, warmer climates, also on the East Coast. That's their primary travel routes. That's why, you know, Jenny or I maybe haven't interacted with it, being in Chicago. However, my question to you more explicitly is this disappointing guidance, this worrisome guidance, a matter of a travel mix shift?
I wish Bob would come back and show us the light.
It was very popular during the pandemic towards maybe European vacations this year. Things are reopened. We got visa changes coming up. Maybe these
Bob, are you
trips
listening?
a year in advance, and they're, even if times are tough, you already
Dink
bought
and
the
me and the
ticket,
gang, we're all
you
still
make it
here.
work. Or is this the canary in the coal mine that the budgets are getting a little bit tighter and we're just seeing it in JetBlue first?
Well, I think that's the case. I think the latter is the case. I also think the former is actually the main culprit, at least right now, for the ultra low-cost carriers or the regional carriers. They don't have the scalability. JetBlue, Spirit, that
I was about to break out, watch.
They don't have the same sort of operating business model. And these two companies actually, in my view, need each other because they need
5
to
minutes
find
at 2
ways
o'clock.
to gain scalable economies of scale, but also improve their operations and efficiency. And of course, consolidate travel routes. In other words, they need to find some way to reduce the number of routes as a combined unit. But unfortunately, the company's finding some challenges
About
from the
routes.
Federal Trade Commission, and it's probably due
Roots
to
grow
a
on
lack of
trees.
roots issues and some
Trees have
anti-competitive
roots.
issues. The other bigger
Planes
issue
have
is,
routes.
I think international travel. If you look at Delta, United, I'm going to use Delta because I know that company a little bit more than the others. That stock is up 42% over the last year. If you look at JetBlue, it's down 17%.
Mullen.
3%. So that gives you an idea. I think the international travel demand
Nice little
is very
double bottom
high
there on the
now.
day.
Pricing power
Filling
in the
that
international
gap.
markets is
Gotta
very
give her
high.
room to run.
Fewer competitors in
No,
international
you don't hear
markets, and
one.
that's where the money's
5
going,
now
at
because of
least from an
inflation.
investment standpoint. And maybe that's where, of course, the profit margins are. And so I suggest for those who are looking for the airline space, you just got to go with positive trends, and that seems to be the legacy carriers,
There you go,
American,
SPY.
United, and of course Delta
SPY.
versus the ultra cheap carriers or low-cost carriers like JetBlue, which, if you look at it in the last 6 quarters, has been really trapped in a trading range between $9.5 and $6.5. And until it breaks out of either direction of that range, it's just going to be in a trading range until otherwise proven.
So, George, really quick before we let you go, that some of this guidance that JetBlue gave, you don't think this necessarily signals the fact that we could see some softening demand in the second half of this year? Because I think, based on the other airlines' movement to the downside today, that's read as like a broader concern. But could this be just a JetBlue-specific problem?
Well, I think that's a good point. I think if you look at where we're at in terms of the cycles for bookings, we may end up being in a lower point right now from a seasonal standpoint. So maybe the airlines all together will have some near-term weakness as we move into the latter quarter of the year, just from a seasonality standpoint. But nonetheless, you got to look at companies that are raising guidance, generating better operating margins than companies like JetBlue, and that's why effectively there's disparities between price performance of companies like Delta versus JetBlue.
Right, and United is one that comes to mind. They've been pretty consistent and pretty strong all year long, and their guidance was also still objectively strong. So that's a really good point. But we will leave it there. Appreciate the breakdown on why we're seeing this selling today in JetBlue, but also the airlines. George Tillis, senior markets correspondent for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the Watch List with Nicole Petalides.
There's SPY. There you go. Little move to VWAP and beyond. Barbecue, little green candle, 274, 28.90 on barbecue. GME down 3.4, yeah. Interesting volume sell-off there. Inexplicable. Good job tinting. Nice. Like cars or buildings? Someone knows something. It's like you want $5 on Nikola. Really get it moving. Oh, weak little breakout. Guess VWAP was close. Need to rip through VWAP. There we go. Let's see, 458. Oh. Full stop hunt. Didn't work.
The CEO actually did mention that on the call, so they do foresee the remainder of this year with strong demand, as well as bookings for 2024 looks to be very strong as well.
Screen the both sides shop, nice. Well, at least you're doing them inside.
In order to help them do that.
That is shop.
Yeah, and you know, these are the names
Instead of just sitting out on the side in a tent or something. Gonna find shade behind buildings.
Today, but it's worth noting there's only a few names that have actually doubled, and both Carnival Cruise and Royal Caribbean are up more than 100% each this year, which sounds incredible, but not so much when you look at what's going on with Tupperware, because that's up 600% in 1 month, but not exactly the same story. Tell us more about this.
Yeah, so for Tupperware, we are actually still seeing a move to the upside. It's up over 30% in the session, and right now it's really just a short squeeze that is taking place. We have seen the short percentage float sitting out there at around 26%, with the days to cover at around 0.08 days. So, Nicole, when we talk about days to cover,
because all the volume is getting.
If you are shorting this position, the likelihood that you would have to cover that position would be that day to cover. And so, if you are trying to short it, you would pretty much have to be brought back in by the next day. And unfortunately, there hasn't been a lot of shares to be able to short in the marketplace. We are seeing the annualized rate when it comes to what you would have to pay in order to short this particular stock, and right now it's sitting at 144.75% on an annualized basis. If you look at it on a daily basis, that would be around
oh yeah, that bar fee finally shot up.
Day of the position value that you would have to pay.
Oh no, I guess it's been up.
Short this stock, but this is not the first time that we have seen this.
We've been climbing.
Other names over the last couple of weeks and even months. Sirius XM once again also saw a bid to the upside, high short interest, but we did see a situation where a lot of trading volume occurred, and when you see that trading volume happen, it does catch a lot of short sellers off guard, and that could create this domino effect to the upside. Seen the same for Beyond Meat, SoFi, and SoFi was actually very interesting because not only were they a part of a little bit of a short squeeze, but they also had really good data coming out from them.
Oh yeah, your cheetah
announcement as well. So
your cheetah IPO. Well done, man. You should sell it.
Yeah, amazing. I'm
Good.
glad you brought all those other names to us as well.
What was the pre-IPO price? What'd you get it for?
In a big way. And people have more appetite for risk in general. Thank you so much, Kevin Green. Great to see you.
Looks like it opened where pre-IPO'd.
Matthew Johnson's with
that right?
us, Johnson Wealth Management, Income Management. Good to see you, Matthew. Your thoughts on the markets?
Did I just hear you say that people are willing to take on more risk right now? Is that what I heard you say, Nicole?
That's what I'm hearing. I mean, that's what I'm hearing. New highs last week, right?
Okay, well, I might be the dissenter in this group because as in times past in interviews, and thanks for having me back on again. It's always a blessing to be on here. But the reality is that I think that some of us are starting to get a little worn thin on this continued increase in interest rates. The reality is that if we study history, Nicole, the track record of the Federal Reserve is not all that great. If we go back to, say, World War II, and we study World War II basically from that point forward, and we extrapolate out the cycles in which we had inflation that was at 5% or above, after the rate hikes, they have a 100% success rate of a recession taking place. And this is the concern that I have for a lot of people. We're starting to, we're seeing the numbers coming in, and I think it's definitely time for a respite. And yet, I don't know. I'm looking at this Federal Reserve and I'm scratching my head and saying, why do they continue to keep nailing these nails into the coffin? Just give it a break and let the economy do what it's naturally going to do, because we all kind of understand it takes time from what happens in Washington to what actually takes place in Main Street.
Right, and so look, you have
I
also
really
sometimes they say that Wall Street
pulling
and
up around
Main
BWAP.
Street are not necessarily on the same page. What would you say?
I would say that that's a kind of a foregone conclusion. That's absolutely true in many respects. It depends upon the area of the country that you're in.
Apron broke out there.
We
New
understand
high,
why the Federal
17.5%.
Reserve has been doing what they have been doing, okay? And no one's faulting them for that. But just think about how they were pitching this to us for the longest time, and that was the
Savon
fact
up
that they wanted a soft
7.8.
landing. Well, it feels like they continue to drive interest rates up, which continues to drive the economy into more of a shrinkage mode. It's like they're trying to land the plane, but they don't even have the landing gear out yet. And so the sentiment here is that we have to be very careful to understand that there is potentially some volatility on the horizon that we need to be very careful with. Now, I don't know if the Feds are going to be dogmatic or gutsy enough to raise interest rates again in September, but I really hope that this last July rate increase wasn't going to be the thing that pushes us just right over that proverbial cliff, because I think this is when people can
Nice
become
tree.
kind of blasé. Maybe
Yeah,
they're
trade and IPO days
a few
can be
steps
fun.
away from their portfolio. They're not really paying attention. They're on vacation with their family. And this is when things tend to go awry. And we're looking at data that came out just
Raise the
today.
rates.
And what are we seeing that's happening to orders? We're seeing that manufacturers are seeing no longer such a big backlog of orders. And we have to take that into consideration. What does that mean for the rest of what we're going to be seeing happening in the next 6 months of the year?
So you talked about onward and upward for the Feds hammering the nails in the economic coffin and basically saying, look, they're willing to do this again. Historically, they've done this. They can take the economy down. Do you see a repeat happening?
If they go ahead and they raise interest rates again in September, I absolutely do. And I don't want to say that I'm not trying to be a pessimist here, but the reality is that their track record shows that they continually have this propensity to overcorrect. And when you overcorrect and you don't give the economy enough time to just kind of digest what's going on and naturally calm
GME
down,
still down there with all that volume.
and I suppose that there could be those proponents out there.
Some
Nicole,
insider or
say,
something sold,
listen,
maybe.
The reason that we're
I
saying
don't know.
that
That's
is
weird.
because the Federal Reserve has done what
Still no
they've
news.
done. And I agree with that to some extent. But do we want to continue to push this envelope, or is it time to just back off a little bit and let the natural order of things take place? That's what I'm arguing for. Of course, I'm not a big enough cheese that they would listen to me, but the reality is that I think investors today, especially retirees, have to be very, very careful because they're optimistic. Think about it. Their balances have come back, right? They're within 4% or so of the previous high of 21. Are they going to be susceptible to that of another drawdown?
And so at this point now, as you're handling wealth and income management for folks, you're feeling a little cautious. There are folks who want maybe a barbell approach where they take more risk on one side and a little less on the other. What are your strategies at this time based on what you're seeing?
Well, I'm so glad you asked that, because the majority of the people that I serve are going to be 55 and over. They're going to be retired. And if we think about it, you know, many of today's financial advisors, Nicole, are trying to derive income from a growth-based portfolio. I believe that that is a very serious mistake for people that need income because they are retired or they're nearing retirement. So, you know, I've said it before and I'm going to say it again. One of the positives of what the Federal Reserve has been doing is it's creating absolute fire sales for fixed income. And, you know, most of us would just kill to have 5% in appreciation on our portfolio. Well, think about what if
BBBYQ back down to VWAP.
portfolio was producing 5 or 6% in interest and dividends. And so this is about two things. It's about reducing your risk to principally protect what you've got on the board. Okay. If you just got done getting it back, keep it. Keep those points on the board. And number two, this is about taking the wealth that you do have and getting it to work for you to produce a consistent income of interest and dividends every single month that you can count on. And this is going to be very important because with the economic cycles, you and I, we're not big enough to control those things. But we have control on our money and what our money does for us. And so we need to be very objective, very purposeful, and we need to be focusing on those dividends and those interest dollars coming to us.
Matthew Johnson, great to see you. Thank you very much. President, owner, Johnson Wealth and Income Management. Thanks, Matthew. All right, later this hour, the president and CEO of Trex will join us to talk about the company's 52-week highs and their latest earnings report. We'll also take a look.
Trex. He doubled down. Jeez, is he gonna hold through earnings? Sounds like his value investing quickly flipped to degen and greed. MSGM hanging out at the high there. That is neat. Meme stocks. He just trades on fundamentals, I guess, not TA at all. No matter how much faith you have in a company, if it's up 600% in a couple weeks, you should take profits. And do the opposite. At least I'd like to think I would. I mean, naturally, yeah, I'd love to double down. What's next, GME?
with its EPS coming in nearly 20% above forecast. Shares are up more than 45% from a year ago. Zoom Info shares are trading at an all-time low after its guidance, prompting a downgrade from Deutsche Bank. The company now expects revenue
There's the
between
break on VWAP.
$122 billion and $123 billion. $1.23 billion to be more clear, about $50 million lower than previous estimates. Deutsche Bank downgraded the stock to hold from buy and lowering its price target to $20 from $31. Decline in earnings and net sales have Zebra Technology shares on the decline. It's the biggest laggard in the S&P 500 today. The company also said it expects net sales to drop by 30 to 35% year over year in the fiscal third quarter. Today's decline puts shares of Zebra Technologies into the red for the year. And Rivian's bull run, well, that's taken a pause today, a downgrade from Cantor Fitzgerald to neutral from overweight. The analyst note to investors cited concerns about valuation, saying that the EV maker shares now appear to be properly priced, and shares of Rivian are up 45% or so far this year. And here's a look at Bitcoin, 29,155. That's down about 0.5%. All right, time for Technical Tuesday. Joining me right now, Kevin Horner, Senior Manager, Trading Services Education at Charles Schwab. Good to see you. A lot of excitement in the markets as we've sort of kicked off the second half, and we just ended the month on Monday. And look, you had the NASDAQ and the S&P at new highs of this year. Last week, about a week ago. So what are you thinking here when you see the S&P 500?
I feel like a broken record, to be quite honest, Nicole. There's not a whole lot to suggest a change in what's been working and playing out. I think that traders on the bullish side of things remain so. You've got major moving averages held. We can talk about a very short-term 10-day where the where the SPX is testing
rallying up there.
today. The 20-day, 50-day, we're above all the major moving averages as it relates to the SPX. And the truth is, we just continue to grind higher here. There's absolutely a ledge there at 4,600. We got into it last week. In fact, we did so on Thursday. We had that terrible bear engulfing candle. And I think it just speaks, Nicole, to the reminder that trend traders need to keep in the front of their forefront of their heads, which is you can't predict a breakdown. You don't want to get involved in selling to the downside or creating shorts until things have started to actually fall apart. And that candle on Thursday of last week is an excellent example because it did suggest potential subsequent weakness, but it hasn't materialized. And usually that's a 1-2 day, maybe a 3-day candlestick pattern, and yet it did not happen. So I think you just have to be reminded this is a very resilient market, getting stronger data from the economic side of things. And you know what? Until we actually get a break, we
Nice,
really
Cameron.
cannot suggest that there is downside risk here. You actually have to let that play out first.
Really? Wow, that actually sounds good for folks. They might like to hear that. Let's move to some specific stocks and charts that you're watching. The first one is Maxeon Solar Technologies. Tell me about this one ahead of the earnings call next week.
Well, you're right. Earnings coming up on the 9th, so they're about a week and a day out here. The interesting thing on this is that this moved to a new high back in middle of May, coincident with their last earnings announcement on the 10th, and it made this excellent break up to the upside, but it was short-lived, and we have spent the better part of the last 3 months just kind of retreating and retracing our steps. Now, what's positive here is the confluence of information, as you can see, at this level, right around 23 or so. There's a lot of support there. You have the 200-day moving average. We have the manually drawn white uptrend line. You have horizontal support. Reminder that we had been through kind of banging our heads on that ceiling in November and January into February of this year before popping through it. We got through it there in early March, and then it became support. And, again, the reminder from the trader who's making sure they're monitoring charts from their standpoint, this is a commonality. You'll get a breakout, you'll make new highs in the short run, you'll see that we retreat to that breakout spot and test to see if we can validate that as support. So there's a lot of important valuation at that ledge there, $23, and I think new traders could position themselves for the potential continuation of this longer run trend, but with a tight support, you know, somewhere in the neighborhood of that, the lows of last week, maybe the extended low for mid-March. There was a quick level around 22. It all just comes down to, Nicole, of course, having a plan and knowing how you're going to act if things don't give you the hold that you're looking for if you're stepping into a new position here. But it's really interesting because the whole group, you know, it has been very, very strong, and you find one that's kind of sitting at support, it doesn't look quite as overbought as a lot of the securities in that space right now.
Well, that's the whole thing, because it's up about 50% this year, but I love seeing a chart breaking out, that gap higher, the new highs, but as it retreats back to those trend lines, then you start to scratch your head and say, okay, what next? You know, will the big trend still be the uptrend? But after you see a new high like that and get excited, but then it pulls back, could be a buying opportunity. We'll see. As you said, you have to watch. And something else you're watching is InMode, also a winner this year. This one's up about 23%. Had its earnings last week. Your thoughts on this one?
Well, the earnings move does give you this visual on the candlestick pattern that, oh, you had this attempt to really break out that has not since materialized. But what has mattered has been that the last 3-4 trading sessions have held that green ledge at around 41.5 from about 42. We had gapped really nicely higher heading in to this right around July 12, and that took out a very important level of resistance. It had struggled to get through that 41.5 area. So right now, I think what bullish traders are thinking is, hey, you've got a gap level under 41.75. If you work around that 41.75 once more, it's not a surprise to have broken higher, come back and tested that. Now, if we get under 41.75 on a closing basis, then you might have a scenario where you need to be patient and play this out.
Kramer said something good about it.
So new traders who are thinking this is
DFLI still grinding?
Bouncing
Yeah, that's
short
crazy.
run, you're going to want to position against that gap level in a lot of
CFL
cases.
sold?
But that's because it provides a proper risk.
He's the one that just quit,
reward
right?
scores, Nicole. We're always trying to build that proper trade. Downside risk right now, something like 2 points, and upside somewhere between the $50 level and maybe as high as
That's what that volume was on
55,
today?
depending on
Him
how
selling?
this resolves. So what you're ultimately looking for continuation are closes over $46, where things really look like that it's reasserted itself. So somewhere between 46 and 41.75 or 42. It's kind of the range we're in, and you can kind of just sit back and wait and see if one of those scenarios occurs, and then trade the way it breaks. That's a common approach that technicians will put in play here. Is just waiting and letting the market tell them how to trade it.
Okay, so we'll do the same. Kevin Horner, thank you so much.
Excellent.
Wonderful to see you. Senior Manager,
Likewise.
Trading Services Education, Charles Schwab. Thank you, Kevin Horner. All right, coming up next, we have the president and CEO of Trex. The company just had its latest earnings beat. We want to talk about what's ahead for this company, and he'll join us next, right after the break.
Mullins grinding. Yeah, Mullins down 1%. See if you can fill that little gap there. Buy coming down there. Oh, fleshy flush.
As we expect the consumer to remain strong through the third quarter. As you get into the fourth quarter, as you mentioned, the consumer does fall off somewhat as we get into winter months. You still have a good portion of the country where decks can be installed throughout, but you do lose part of the Northeast and Midwest marketplace. But we feel as though the consumer will remain strong in the repair and remodel side as we go through the rest of this year. And then as we enter next year, we've seen continued good results from our marketing efforts, and we will double down on that to drive those buying behaviors.
We were looking at some of the construction spending data numbers. How are you finding people, I guess, families and individuals and businesses too? How are they spending? How would you sort of quantify the spending that's been going on?
Yeah, we see that consumers are wanting to spend on improving their households. We've got a record high age of homes, more difficult for the consumer to be able to move up to that next home. So they're choosing to invest in their existing places, and where you can add square footage at a low cost, or relatively low cost with Trex decking, they're choosing to do that and continuing to drive our sales performance.
How are you feeling about the housing market? I know there's been fluctuating mortgage prices, but mortgages certainly have basically doubled since the Fed started raising rates. How are you feeling about the housing market?
The doubling of rates is clearly a challenge as it relates to the new home builders. But on the flip side, there's a shortage of new homes at this point. So I think that there's been somewhat of a leveling out on the new home side. I think what's important to understand with Trex, 90 to 95% of our business is repair and remodel. So we don't correlate with the new home particularly well. But of course, over the long term, the more new homes that are built, the more opportunities to install Trex decks.
Can we circle back to some of the old conversations, whether it was supply chain or labor issues, tight labor, not being able to find the workers that you need? I mean, we are seeing plenty of people quitting jobs. We got that JOLTS report today. Tell me about labor, supply chain, some of the things that all CEOs are sort of dealing with. How would you quantify how that's been going?
Yeah, we've talked about that in the past when we've been together here. It seems things seem to be loosening. It is easier to find labor, but I wouldn't say it's necessarily easy at this point. We're looking for the right people that can be successful with us over the long term. We are rehiring again as we look to next year and as we look to bringing more capacity back on, but it is a challenge in the marketplace still.
Yeah, without a doubt. And in the meantime, when you see people spending on some of your other products, you have pergolas and stairs and furniture. Is it important to have that innovation and not just be the decking that we once thought of, which also you use recycled materials and such? Tell me about the innovation going forward, what you see the most demand for. Where are people really asking more questions?
Innovation is extremely important with the Trex company. We use 95% recycled material in our product lines, which is difficult to work with, but gives us a great green story with our customers. This year alone, we've had 3 product launches: Lineage Decking, which is part of our Transcend family; Signature Decking, which has the look of true, real hardwoods; and then a new T-rail program, which is designed to replace very popular vinyl rails in the marketplace, give a much higher quality option at a similar price point for the end consumer. So we'll continue to focus on innovation and drive new products to the marketplace.
Yeah, I know you had a buyback that you announced. You've been working on that. Are you concerned about a recession or slowdown? How's the balance sheet? How's the company prepared in case we do have an economic slowdown? I'm sure you have different price points for the different products for people if they want to spend less. But how concerned are you about an economic slowdown, and how's the balance sheet ready for that?
We were much more cautious entering into 2023. Well, as we plan for the business as we move forward, there's still a level of caution. Historically, we continue to have a very conservative balance sheet. We tend to run pretty low levels of debt. We use a credit line, which allows us to provide appropriate dating terms to our customers as needed, but also be aggressive when the opportunity presents itself to jump into the market and buy back a meaningful number of shares. Last year alone, we purchased almost $400 million of shares.
All right, anything that I left out that you want to add in? You're a friend of our network. I know you were here with me on set last time. It's always great to have you on the show, Brian. Any final quick thought? I mean, it may be a good holiday gift. Hey, darling, here's your new backyard deck.
Yeah, we still see great opportunity for growth within composite decking. Coming through the pandemic, more and more people have composite decks. They're looking for outdoor living. It's the largest segment of repair and remodel. So we're really excited about our future for growth.
All right. It's good to see you, Brian Fairbanks. Thanks for coming back on the show. Good to see you. Thanks. President and CEO of Trex. Still ahead in the second half of our show, we're taking a closer look at the tech services industry and what AI and some recent job cuts mean for the outlook going forward. That and much more as we head to break. Take a look at some winners and losers in the S&P 500.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network. Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. A busy week ahead. Look, we're going to have some key earnings. We have about a third of the S&P 500 reporting earnings this week and a big jobs report on Friday. And you'll have names like Amazon and Apple to watch for on Thursday. All right, here's a look at the markets. The Dow is the one that's the winner here, and that's thanks to Caterpillar helping to keep that propped up. But some of the other sectors have been to the downside. S&P at 45.79. You have consumer discretionary, energy, utilities, healthcare, staples, materials, financials, all lower today. NASDAQ down 0.1%. The Russell's down 0.5%. for a market update, I'd like to bring Ben Lichtenstein in, senior futures contributor. We have 90 minutes left in the trading day, and people were talking about 30-year bond yields on the rise. We hit those highs recently for the S&P and the Dow, but we've since pulled back. What are you watching? We have 90 minutes left in this trading day.
Yeah, yields attracting some attention here, Nicole. This afternoon as we inch up, a bit of a headwind for stocks, and I'm mostly noticing kind of a mixed session for the most part. As you mentioned, a fair amount of information. I think you said a third of the S&P 500 companies reporting this week. I think it's something like 50 reporting today alone. So I did notice, though, I think a good place to begin our look at charts is the Russell, the strength we've seen there. Small caps after closing the month of July up 6%, pulling back a little bit here today, down by about 0.75%. But that high that you see there on the top right corner of your screen at 2017.80, that was a new high for the year. So the Russell, the broader base representation of small cap stocks, the most recent to participate. Today I saw the SPX down to 45.67. We had the Russell down to 1976, the NASDAQ to 15,636. The Dow, a bit of an outlier here today. It's strong relative to the other majors, are not losing as much, I guess is the best way of putting it. Taking a look here, though, at the bigger picture, you can see the S&Ps in this trend we've seen to the upside continuing, just in a bit of a holding pattern, just off the highs that you mentioned. Last week, we saw the Dow, the S&Ps, new highs for the year, above the 50-day moving average, the blue line, above the yellow line here. That's the 200, and the rally we've seen throughout the month of July. I mentioned the Russell up 6%. That was really just continuation of the bid we saw off the October lows. We saw it through June, through last month as well. And with this bid activity, look where the VIX is, Nicole, hanging out at these lower levels historically, well, relatively lower levels, I should say, ahead of, as you mentioned, some closely watched earnings. Again, those names we're going to be looking for today and into the end of the week, as well as some data still due out, right? We're going to get some non-farm payrolls Friday. Before that, we're going to look at the Challenger, the weekly numbers, as well as the ADP. So the jolts this morning, kind of showing that we're still seeing strong labor conditions, Nicole, but this market very mixed today, I guess is the best way of putting it.
And look, there are still people who think the recession could be coming. I mean, we had RSM economist on today, Tuan Nguyen, who actually said they just readjusted their likelihood of a recession to 60%. Anything more than 50% starts to feel, more likely than not. That's what it says. So, you're surprised when you see rates moving higher and fluctuation in rates. What are you watching when it comes to that?
Well, really, these key thresholds, for the most part, you've got 10-year at 4%. You've got the 2-year inching its way back up to 5%, right around 4.8. I think should we take those out, it's going to really start to raise some eyebrows. But even more importantly, you've got the upper extreme of the ranges that we've been in as of recent. I mentioned the 2-year, the 5% level. Take a look at the chart. You can see why that's significant. We've tested it a few times going back in March. We had a high there. Most recently, again in July last month. And here you can see we're not far from it right now, right at this 4.8 level. I want to show you where we are in terms of the 30-year on the left at 4.1. You've got the 10-year on the right. I mentioned it's hanging out just above 4%. And I did see the 2-10 spread, the least inverted it's been in about 6 weeks, about a month and a half. And again, rates on the upside here, or to the upside, are going to pose a bit of a headwind for stocks. Investors have really kind of shrugged off the recent run-up we've seen, but I think if we were to take out these highs from last fall, that would be a bit of a different story. Right now, again, the data hasn't necessarily supported that move yet, but we've got the dollar on the move higher right now, back up to 102.22 off the lows that we saw, down around 99.22, I think it was that 15-month low just a couple weeks ago. So lots to keep an eye on here, especially if the dollar takes out 103.27, possibly a leader here to the upside. Again, I want to just kind of tie these conversations together, Nicole, and point to how rates in the beginning of, well, 2022, beginning of this year, it actually posed a bit of a headwind for stocks. You can see how the 10-year on the right ran up to 4.3, the 30-year on the left to 4.4. Throughout that period, we saw stocks, the S&Ps on the bottom half of your screen, down to 3,500. But off that October low from last year, we've seen indices rallying amidst rates which are holding these upper levels. So again, investors kind of shrugging off this negative, focusing on the positive. And there's a few aspects we're seeing that play out. I guess the question is, if rates continue higher, will they be able to do so?
Right. All right. Well, thank you for that. And I think you make a great point about the 210 spread, the 210 spread being the least inverted in about 6 weeks. I mean, I think that's telling. Thank you for that. All right, good to see you, Ben Lichtenstein. Thank you. Let's shift our focus back to technology, one of the few sectors that actually has an up arrow today. Joining me right now is Siddhant Rastogi, managing partner at Zinnov. Thank you for being with us. So we know tech had a slew of layoffs over the last year and a half because they did a lot of hiring because COVID was so uncertain who was home, what they needed, they overhired. What kind of trends are you seeing right now when it comes to tech services?
Right. No, that's a fantastic point you made in terms of tech services companies going above the ramp in terms of hiring. If you look at the services sector, this sector has been a little different because they typically hire on demand. And what we have seen is the COVID times had extremely high levels of attrition. So we had some of the companies reporting as high as 30% attrition, which is very abnormal. It's very hard to run companies at that level. So what we are seeing right now is that the typical headcount reduction is not going to be very high. So you will see companies not hire as much. So we have seen companies like Wipro not hiring for quite some time. There are other companies that are slowing down on hires, moving out campus hires, and allowing the normal attrition to reduce the headcount. So that is what we are likely to see, and this should continue for the next couple of quarters.
Look, I think that the obvious is that AI, while it can provide some good things for companies and, the data is always crucial for companies, folks in their jobs are up against AI, right? I mean, what kind of jobs are going to be the first ones to go?
That's an interesting point you made, right? So AI, of course, is almost a once-in-a-generation type of technology. At the same time, as students of the technology services and the technology space, one of the things that we have realized, if you look at data from the last 20 years, the tech services companies have almost always benefited with every technology inflection point. It could be cloud, it could be SaaS. And what we are seeing is that AI has always been there. Generational AI or generative AI is new. And most of the enterprises are still figuring out what has to be done with it. And whenever they are ready or whenever they are looking to ramp up or scale programs using Gen AI, they will need people, they will need expertise, they will need bandwidth. And this bandwidth typically is supplied almost always by the tech services companies. And we are already seeing some green shoots of this happening. For example, you would remember Accenture recently reported that they have 100 projects worth 100 million in just the last 4 months on generative AI. And I firmly believe that, the other companies are trying to catch up. And over a period of time, they will have expertise, they will have offerings to cater to some of this demand.
Can we talk about some specific companies that people know so well? I mean, when you think about Microsoft, there's ChatGPT and OpenAI. Google has, as a matter of fact, I was reading something about Alphabet Google and Google Assistant and how that was going to take on something like ChatGPT and actually eliminate some jobs as far as assistant type jobs. But when you think of AI and this technology, which names seem to be the leaders to you at this point? I mean, I think Google and Microsoft are names people always talk about. You could put Amazon in there with cloud and Amazon Web Services and things like that. What kind of names jump out at you?
That's a very good point that you made. And what we are tracking is some of the experiments that we are doing with our enterprise customers. These are mostly on the software development side. So on the software development side, we see Microsoft Copilot to be the most adopted generative AI or a feature that allows for using AI during development. The other forms are slowly catching up. So for example, the Code Whisperer from AWS or Amazon is also a brilliant tool. And what we are seeing is the adoption or partnerships that these companies are trying to develop will decide the scale of adoption. So for example, AWS, if you remember, just recently announced a $100 million program for just partnership on generative AI. Most of this budget is going to go to service providers who can create
DFLI
platforms
7% there. That's pretty good.
Code Whisperer and allow AWS to be deployed across enterprises in their portfolio companies. So I think this is going to be a big impact going forward.
So at this point now, we talked about the digital engineering report that you were looking at and you worked on. You see some big growth, nearly 20% for digital engineering over the next 4 years, right? And so that should really provide opportunities and growth and maybe even some different kind of jobs that you might be looking at about M&A. And you talked about things that were Cognizant specific that you can explain. I'd love to hear your final thoughts before we let you go.
Right. I think one of the interesting
Mullen
things
not rallying anymore.
I'd like to point out, and you mentioned Cognizant, which is one of the key things, one of the companies that's going to report tomorrow. I think what we have seen is a lot of these tech services companies are seeing major leadership changes. We saw Cognizant have Ravi come on board just 6 months back. We've had TCS with new leadership. Accenture announced a new COO, a new CTO just last week. A lot of changes are happening at leadership. And one of the things that we have noticed is recessionary times are very good to implement changes. The changes can be faster, they can be deeper. People are more amenable to change when things are not going that great. What this means is, in the context of most of these service providers, is we are likely to see a lot more investment in capability. We are likely to see them use a lot of their cash pile to have or do acquisitions as they move forward, because each of these acquisitions will help them build capability in certain segments, help them build revenue streams in new areas. So that is something that we are very likely to see. Specifically on Cognizant, I think what they have done is put very good leadership in key roles. So they also have appointed Prakash, who comes with about 3 decades experience in Accenture and Bain, looking at and now heading the software and platform division. And software and platform for sure is going to be a driver for digital transformation going forward. We have also seen Cognizant appoint 6 new SVPs just in the last quarter, a scale of diversity we haven't seen in most services companies. So overall, we do believe that in the medium term, this is definitely going to be positive for Cognizant and some of the other companies as well.
All right, Siddhant Rastogi, thank you so much, managing partner at Zinnov. Thank you. Still ahead, we bring in our panel to talk all about Molson Coors, the battle of the beers, as a lot.
Brad's up 2.5. Next down 6. TFLI's up 6.5. Hard to get sustainable runners. That engulfing candle and SPY like just shut down. a lot of the easy money flowing around. Eyes coming back down a little bit here. Just chopped around VWAP. Really today's just been a chop. Had one move here, but I guess that morning move to the downside. I over traded before there, so by the time I got to there, I'd punched too many on the punch card. Missed that move. Can someone send me a link for the hearing? I don't know, Cameron, if you're around. Just throw it in media. I don't have it. Same week as yesterday? Same as it ever was. Same as it ever was. I have to scroll through all this chatting you guys have been doing in media to find it. Hold on.
After extensive pre-petition efforts to stave off a Chapter 11 filing.
Dave.
We filed with $240 million of committed post-petition financing from the pre-petition FILO lenders, a portion of which was rolled up on the interim order and a portion of which was new money. That financing has funded what we viewed as a dual track process, a immediate wind down of the debtors' businesses in conjunction with a process, which was a continuation of our pre-petition marketing process, to market the assets on a going concern basis. The financing has also funded critical reserves to fund the payment of priority claims, warrant-related payments, and the costs attendant to the wind-down process. Those reserves are in large part what allowed us to file this plan and put before you the plan in DS today. Our mandate throughout these cases has been to salvage and maximize value for the debtors' estates as much as possible, and I believe we've been successful in prosecuting that mandate to date. It's truly been a Herculean effort by the debtors' management team, their employees, our CRO, Holly Etlin, her whole Alex Partners team, and the other advisors in the courtroom and on the line today. As your honors aware, while the going concern process did not result in a viable buyer, we were able to sell the IP assets of our Bed Bath and Bye Bye Baby banners, generating nearly $40 million in cash proceeds. And we're hopeful that the storied brands will continue to exist even after these cases. In conjunction with the sale process, we also engaged in a robust lease optimization process, which your honor is very well aware of. We implemented this strategy pre-petition, closing a number of stores, our Harmon brand, and our Canadian operations. And as of the petition date, we had about 1,000 leases remaining in our portfolio. Several hundred of those were rejected on day one and throughout the case to relieve the debtors of their ongoing 365D3 obligations. And as your honor was made aware in these prior hearings, we've reached an agreement on nearly 200 leases that have generated nearly $70 million in cash proceeds. On the GOB process, as of yesterday, we've completed all of our store closures and going out of business sales. That has involved liquidating all the inventory, fixtures, and other assets in our stores, which has generated substantial value. Approximately $585 million in net proceeds on account of the GOB sales, and nearly $200 million in net proceeds on account of Augment and FF&E sales. So on top of
you said net sales?
Net proceeds.
Net proceeds.
So net of costs incurred in conjunction with the liquidation process.
And so that means that the $585 million plus $200 million went into the estate.
Correct, your honor.
Okay, so then just with rough math on the that's 785 with 110 is about 895 in proceeds to the estate at that 895 million, we should say, in proceeds that actually came into the estate and is now subject just to the ongoing admin expense.
That's right, your honor, among other asset realization efforts that we've undertaken. But on top of all of that, we have been running down every other ground ball and trying to realize the full value of the estate's assets. That includes pursuing tax refunds, recovering LCs, cash reserves from credit card processors that are property of the estate, as well as pursuing viable claims and cause of action that the estate has against other parties, including shipping claims that your honor may have seen. So all of that work will continue. It will continue post-confirmation, it'll continue post-effective date, and it's in large part what we will seek to get stakeholder recoveries based off of. All the while, your honor, we've worked round the clock to develop and negotiate a Chapter 11 plan and disclosure statement with the committee and the DIP lenders to bring these cases to their final stage. As you'll recall, we reached an agreement with the committee and the DIP lenders as part of the final DIP order, which related to the distribution of proceeds of the estate's assets. That agreement coalesced critical support across the capital structure, and it's reflected in the terms of the revised plan that we filed last night. For your benefit, we did file the revised disclosure statement and plan last night at docket numbers 1687 and 1690, respectively. Red lines were also filed to show the changes from the initially filed versions, and we also filed a revised proposed form of order approving the adequacy of the disclosure statement on a conditional basis at docket number 1692. As your honor is aware, the order shortening time on the motion entered at docket 1473 set an objection deadline with respect to the motion of yesterday, July 31st at noon Eastern time, and we're pleased to report that no objections were filed. We have been in discussions with the trustee's office, counsel to the SEC, and counsel to two landlords. And a few of the changes reflected in the revised documents resolve some of the concerns that were raised by those parties. As a result, we believe we're proceeding today on a fully uncontested basis. I will caveat that with the understanding that parties' rights with respect to confirmation issues, like the release and exculpation provisions in the plan, are reserved to the confirmation hearing, which we have tentatively set for September 7th.
And the final approval of the disclosure.
That's right, Your Honor. So with all of that said, Your Honor, the plan and the DS are the product of extensive good faith negotiations between the debtors, the committee, and the DIP lenders and other key constituents. We believe the plan represents the best currently available path forward to the ultimate conclusion of these cases, and it critically enjoys broad support of our key constituents in these cases. The debtors submit that the disclosure statement contains adequate information as required by Section 1125 of the Bankruptcy Code, which will allow parties in interest who have claims to make an informed decision as to whether to accept or reject the plan. Moving forward with soliciting votes on the plan at this time is unquestionably in the best interest of the debtors and their estates, and aligns with the debtors' overall duty to maximize value, as I explained before. Additionally, Your Honor, out of abundance of caution, we're seeking a modest extension to the debtor's exclusive right to file a plan by 90 days through and including November 20th, and to solicit votes on the plan through and including January 18th, 2024. We believe the confirmation process should play out with the debtors in exclusive control, and that is something that both the DIP lenders and the committee both agree with as well. So unless Your Honor has any questions about what I said about anything in the revised proposed form of order, we would respectfully request entry of the order.
Well, I do have one general comment that about an unsigned objection that came in just well, I just received it this afternoon. It looks like it might have been submitted to the clerk's office yesterday afternoon, but it wasn't signed and it wasn't there was no service indicated that I could see. And it appears to be on behalf of equity interest holders, appears to be done at least with the assistance of an attorney. But I did not see it until just before this hearing, and it wasn't timely filed, but even more significantly, it wasn't signed, and there's no one that we can attribute it to other than the person that was on the email, who is indicated as boss@gmail.com, and Ms. Steele, I guess Ms. Steele received that, so she's gonna jump up and help me out, I think.
Yes, Your Honor. Good afternoon, Fran Steele on behalf of the U.S. trustee. Yes, Your Honor, the U.S. trustee received an email with that objection requesting that the U.S. trustee e-file the objection for the person in the email. And we are unable to do that, as Your Honor knows. So we forwarded to Mr. Heim of the bankruptcy court yesterday, informing him that we had received it in an email and that we were not able to file it. Just so you know that we received it.
Yeah, and it appears that that's what that's what the court advised. The court is in receipt of the attached document that was forwarded to by the United States Trustee's Office, as submitted that the court cannot accept this objection While I understand Bed Bath & Beyond common stock equity interest holders is not represented by counsel, the document still needs signatures of who is submitting the document, and at present the document has no signature. Please correct and attach as a reply to this email for filing. That's an email from Diane Trzynowski from the clerk's office to the Nile Das today at 12:07 p.m. We don't have anything on that, but I did review briefly. It seems to it's pretty complicated in a way, but and difficult to understand, but also much of it appears to go to the extent it relates to the plan process to confirmation rather than disclosure in any event. Seems like they have a lot of disclosure. Whoever wrote this has a lot of information. So I can't deal with it because it wasn't properly filed. I don't know who filed it, but I do have it. And to the extent anyone from that group, because it appears to be a group of people, then is listening, you know, they need to get it, they need to have it done properly, otherwise it won't be considered. So that's where we are on that.
What?
Thank you, Your Honor.
El Salvador, wasn't it?
On just a couple more on the disclosure statement. So
why didn't he sign it?
Mr. Fiedler, on
Well, I should have mailed it in too, certified. Emailed.
You know, on the header, it's page 16 of 136, page 7 of the black line disclosure statement, 1691. Is that the black line? Yeah. Where it says, you know, summary of expected recoveries.
Yes, I'm there, Your Honor.
So to me, in some ways, this is the most important and significant aspect of the disclosure statement in all its many pages to many of the people who will be reading it and who won't be reading all of it, but will be reading, trying to figure out what they get or don't get. And I'm just wondering, is this doesn't have really any substantive blacklining to it. So it was unchanged by the report that you just gave me as to the net proceeds that have been received thus far?
Well, Your Honor, that's generally right, based on some of the footnotes that we've caveated here. So some of the claim amounts are as of a certain date that even predated the day we filed the DS. The projected recoveries have remained the same. This was based on projections that had been made by the company prior to filing this, which hold today.
Which hold today, even though, so, okay. Even though, for example, if you do the math, and I'm not sure the claims, you know, other than the unsecured claims, it looks like and I'm just going by math, 5, 4, 5 add up to, you know, far less than what you just told me.
Paid off, which is not actually reflected in the summary of expected recoveries.
ABL was how much?
I believe it was 200 million, around there.
Okay, well, that's all I'm saying is that's important information, and I just wanted to, especially based on the presentation that you just made, I wanted to make sure it just jumped to my mind immediately when you said it, as to how that affects, if at all, that chart.
A portion of the proceeds that we discussed earlier have been used consistent with the final dip order in paying down the ABL as well as the FILO claims. And that's why you're seeing numbers on this chart that are less than what we spoke about before.
Okay. I got it. All right. So in other words, it doesn't need to be changed, is what you're saying.
Correct, Your Honor.
Okay. All right, and then on the where is it? On the release section, I just like the, that to be as clear as possible, and opt-out sections to be as clear as possible. And if I'm looking at particularly Article 4J4, amended disclosure statement, which is pages 42 to 43. Right. Yeah, I think this one doesn't have page numbers on it actually at the bottom, but the black line that I have, but
I'm there, Your Honor.
all
40,
right.
42,
So-
43.
yeah, so in the 4J4 language, without limiting the foregoing from and after the effective date. See that?
Yes.
Yeah. So then the claim and interest holders, and the interest holders are getting nothing, as I understand it. Their claims are being extinguished, right?
That's correct.
This says, somewhere it says in full and final satisfaction of their claims, but they're receiving nothing, right? So I'm not clear on, that's actually not in this section. I'm sorry. That's in another section I was reviewing. But in this part, if they, for example, do the interest holders, that's my question on this part, do the interest holders, if they, see, even if though they're getting nothing, they have to opt out, as I understand this, and that then they have to obtain an order doing all these things. Am I reading that correctly?
That's correct. So interest holders will get an opt-out form and will be given the opportunity to opt out. That is the notice.
Because they're not entitled to vote, so they're going to get a ballot or an opt-out form.
It'll be a notice of non-voting status, which will include an opt-out form attached to it. This provision basically is just saying that to the extent there is a claim or cause of action that has been released by the releases in the plan, and a party is contesting whether that claim or cause of action was actually released, they have to come to the bankruptcy court first to get Your Honor's sign off on whether that claim or cause of action was actually released under the plan before taking action in another forum.
Okay. These guys coming up.
Good afternoon, Your Honor. Sorry to interrupt. Emily Geyer from Kirkland Ellis on behalf of the debtors. Just exactly what Mr. Fiedler said. Just wanted to clarify one tiny point. There's sort of two categories of people here, Your Honor, and you're absolutely correct that the equity holders will receive an opt-out form. If they elect not to opt out, they are part of the releasing parties, and there's really nothing more to do through that provision in the sense that they will be precluded from bringing claims on account of the release provided. Now, if they do opt out of the release or other parties opt out of the release or otherwise are not participating in the releases, because obviously that has not been decided by this court as to what the effect of what the releases are that are going to be approved. At that point, if they are not participating in the releases, this is just simply to say that that party comes to this court for this court to determine whether or not that claim is a direct claim that can indeed be brought or is perhaps a derivative claim actually belonging to the estate and thus is in the estate's control to pursue and recover on. The reason for this is the critical nature of those claims and cause of action that belong to the debtor's estate that will be continued to be pursued. And therefore, we can't have 100 claimants that actually aren't entitled bringing those sort of claims and when they actually belong to the debtor. So simply to say, we want to bring it back to this court to say whether or not they have that claim. We included the similar language in block 5, also not yet confirmed,
Okay.
but you
so
may recognize me.
So in other words, whether it belongs to the estate or not, but if it doesn't belong to the estate, whether it belongs to the estate or not, you're asking me to make that determination.
Correct. If it belongs to the estate, then they would be precluded from bringing it simply because as a matter of law, that belongs to the estate. If it's a direct claim, then they're at that point free to bring the claim. It's simply
And
just
if they opt out.
Exactly. If they've opted out, they're not participating in the releases. It's not to stand in the way of that party bringing a direct claim. It's simply to say, please come to the court to check and make sure this isn't an estate claim.
So I'm a first step before those.
You are indeed the first step.
Okay. Well, that's the way I understood it. So I think
Thank you, Your Honor.
the disclosure is good. And then and then I don't know who answers this, but on the I guess it's for it relates also to the releases and interest holders and whatnot. On the effective date and full and final satisfaction of each allowed interest in BBB. So that's the part I'm struggling with. Is it full and final satisfaction of the allowed interest, but their claims are being extinguished? So what is the full and final satisfaction?
Where are you looking, Your Honor? Just for my benefit.
Let's see. I have to get my notes on that. And
Are you referring to the beginning of the third-party release paragraph on page 42?
it's where the treatment of interest holders.
Interest holders, the same as bond holders?
It says it everywhere, actually. And interest, it's class 9. It's right. I'm sorry. It's right at the even in the summary, class 9 interest in BBB in full and final satisfaction of each allowed interest in BBB.
Yeah, Your Honor, we'll make that change throughout. All interests are being extinguished and discharged, and so we'll reflect that throughout the plan and disclosure statement.
Yeah, I mean, you understand what I'm saying. I don't get how extinguishing something is in full and final satisfaction. It feels like the opposite.
Understood, Your Honor. We will make that change
right.
throughout.
Okay. All right. All right. You know, the other, I think you highlighted that, you know, the release and opt-out issues, if people have those issues, they're going to, they are confirmation issues. It's not like they aren't being disclosed here. They're being disclosed, and the substance is what is on for confirmation, and we'll deal with that at that time.
Understood, Your Honor.
So, and as far as extending the exclusivity period for 90 days, and this case is moving at an extremely rapid pace, and I think you've fulfilled, if not to the day, substantially and substantively, all the timelines that were in the DIP order, and which seemed very aggressive to me to start, but it looks like you're doing everything you can to get there. So another 90 days of exclusivity on both filing and soliciting acceptances satisfies all the criteria for extending exclusivity as set forth in your motion. And and then the forms and the notices and the procedures have all been vetted by the lenders and the committee and other parties in interest. As you indicate, this is a consensual plan by the principal parties in interest. So I'm not going to not going to comment any further on those, other than to say I think there is definitely adequate disclosure here, and at least, and certainly on a conditional basis, I will approve the disclosure statement, the related procedures, and extend the exclusivity deadlines as requested. But that does lead to the proposed order, and you know what? I didn't get a chance to look at the revised proposed order in detail and the schedule that you're setting forth, but we do need to get to that, right?
Yeah, I can walk you through the schedule.
92, right? The docket number. And I'm sorry, does anyone else wish to be heard on the disclosure statement and other aspects of the motion? I see Mr. Sandler is on the screen, but I don't know if he wants to be heard.
Your Honor, can you hear me?
I can.
All right. Well, since you mentioned my name, I was going to sit here quietly and not say anything. But since you mentioned my name, I will say something. Your Honor, as you can imagine, there is still wood to chop here, as I think you've alluded to. But the disclosure statement and the plan in front of you represents a tremendous amount of hard work, good faith, intensive negotiations among the debtors, the committee, and the lenders, and is certainly a major milestone in these cases, and the committee supports the entry of this order.
Okay, I figured you might want to say something if I called on you. But, yeah, I agree with all that, and we'll hopefully continue to move forward in this positive, mostly or almost completely, I should say, consensual fashion. Appreciate it. So, anyone else? I think that's indications of people wanting to speak. So I'm on page of 1692. I'm on page 6 of the order. Is that where you are, Mr. Keeper?
The chart, Your Honor?
On the chart, yeah.
Yeah, I have that in front of me.
Event deadline. So disclosure statement objection deadline actually was yesterday at that one, yeah.
Yeah.
Right, at 12 noon or so, or 5 o'clock. I can't remember the close of business. So just whatever that is.
Yes, Your Honor, we'll remove
And
that.
the voting record date, do you need to change that because of
The voting record date, I believe we're going to keep that date.
okay. And the conditional hearing we had, so that the next date that is of significance to me is the very last one, and that afternoon is actually not good for me for a number of reasons. September 7th at 2:30. I did talk to my courtroom deputy about some alternate dates, and keeping in mind that the 4th is Labor Day, could do the 11th or 12th, which is the following Monday or Tuesday. Tuesday would be in the afternoon, or I hesitate to say it, the 6th in the afternoon, but that would push the objection deadline and brief deadlines and all those things to the.
I believe the 11th or the 12th will work for us, Your Honor.
All right. So I don't know if I need to check that with anyone else. So what would the corresponding changes be then if you did the certificate of balloting? Might need to change objections deadline September 1st. Is that, we'll give a few more days if people are if we're moving back to hearing a couple of days.
I defer to Your Honor. I don't think the timeline necessarily needs to change if just what's being moved is the hearing date, but we'll follow Your Honor's guidance on that.
Yeah, I mean, I just, well, September 1st is kind of far away, and it's the Friday before Labor Day. So you're right. Let's keep that. And then maybe what we'll do is just move up the, or keep the, is it, can we say instead the 7th or the 8th for the confirmation? Confirmation brief deadline and combined reply deadline. Those are the same date.
Those are one and the
By
same.
the debtor.
Yeah, those are one and the same, Your Honor.
Yeah, that's what I kind of thought. So, yeah, you could move those a day or two, or you could keep those with it, you know.
If you're going to give us more time to file our reply, we would certainly take that.
Okay, why not?
Okay.
So
thank you, Your Honor.
September 7th, and the combined hearing date. If we think it's going to be consensual, you know what? The 11th we have, and my courtroom deputy, I believe, is on the phone. I think the 11th right now. We were keeping it for a trial in that other case that I told you about, but this would usurp that, and I would have that whole day. So I could do that. Keep it. How about the 11th at 10 a.m.? We have the whole day.
That works for us, Your Honor. Thank you.
And you know, if there's going to be witnesses beyond the proffer of declarations, we need to know that, and we need to make arrangements for that, and I think it's fair for the parties to know who the witnesses are. So
yeah, we'll coordinate with the court on that, Your Honor. Don't envision that to be the case, but we will certainly keep you apprised.
yeah, that's what I'm saying. We need to know for all kinds of reasons, and I think the other parties need to know. And if another party is considering they need a witness, I guess you'll know that from the objection, and we'll deal with it then. Okay.
Certainly.
And I think I said to you before, and if I did, I'm sure I said it before, but I'll repeat it. If there's some discovery issues that come up, or issues that you can't resolve consensually that are of that nature, then you can certainly submit a short letter, or the other party can submit a short letter, 2-3 pages the most, outlining the issues and asking for me to get involved. And the other party, of course, has an opportunity to reply.
Okay. Thank you, Your Honor.
All right. I didn't say that before? No?
You may have said it before.
Okay. But if I didn't, I meant to, and I'm saying it now. So there you go.
Thank you.
All right. All right. So I don't see anyone else wishing to be heard. I think we covered everything.
I think so, Your Honor. So
all right.
We'll submit.
I appreciate it to all parties, and again, for the organized and very effective presentations all the way around. Thanks very much.
Thank you, Your Honor.
Thank you.
Thank you, Your Honor.
Good afternoon.
There's the level. There's the barbecue level. Just broke through it. Okay, I'm out. Close the rest of them. BBIG ran, yeah. Yeah, I mean, if you caught it, it's like, it's come down 85%. But intraday, yes, today it's around 50% now. We were looking at that earlier. 60% from the very bottom, but really like 50% today. Recoup your losses on BBIG, or to get back to where we were before OTC, you need over 1,000% move at this point for that 80% drop. But intraday, sure. All right, barbecue's down 4.3. You'll have another chance. Always another trade. So it seemed like that letter, that email, is what sparked all of that. The judge started looking into. Is that correct? Good game for you too, Ace. We suck again. I guess to me there's still as much of a chance as there was before. But it breaking that level, I was planning on it closing, so we'll see where it holds. Down 10% now. See if that 1740 area holds. If it makes it down there. Could find support here too at like 23 cents. We'll just have to see. This is a huge level to break though. This is the bottom that we've set since OTC. We've bounced off of. Really bounce off it here too. It's that whole area, so 4 times. So to break through that, and then also that head and shoulders, which are breaking through the neckline now on that. Yeah. On 12.5 now. %. Not much action. I know, that's what I'm saying. Like, me, and I don't really understand what's going on, but nothing seemed bullish, so you're just hoping for something at the very last, at the very end. Getting 0 would satisfy shareholders. Yeah, I mean, to me, there's still just as much of a chance as there was before. If someone comes in the end and it brings value to shareholders, then that's the way it is. But I haven't seen. If there was evidence of that, then stock would have already ripped. It's kind of interesting how well it held up. That's another reason what makes me think the OTC has been much more natural price discovery, because I think it truly has been retail. It's been holding up that price. Yeah, Yale's up 150%. This is another bankrupt company. Surprised this hasn't halted actually. 160%. Oh, we're at 35 likes in the day. Thank you guys, I appreciate it. Got about 20 minutes to close. Yell is really going. BBIG did have a 50% intraday move. Still down significantly. Needs much, much more. Barbecue's down 21%. So I'll see if it finds support anywhere. 1750 potentially. Is it just broke? Did it break that level? No, it didn't break that level. Might find support here. I don't know. We'll see. We'll see if the dip gets bought or not. From some, you'll hear this is still just FUD, which it was if you were never, you know, believing anything that was in the filings, more or less. Guts. And SPY has been just such a tight range today. They had the court hearing. I don't understand it. I think the judge pretty much said shareholders aren't going to get anything. Salvador's or someone's letter got in there, their email. It's all haphazard and wasn't signed, didn't have a name, just an email address. I don't even know how it got to his desk, really. So, but the judge actually still kind of respected it because he still looked into it and cleared it up. I don't know. I have to rewatch. Go back 20 minutes. Buy's coming down. Got 20 minutes to close. Ends up chopping the day up.
3 days. That's 8% above the current share price. Standard deviation move that the option market's pricing in. And call volume 4 times normal
Who's
daily
buying the dip?
volume. But at the same time, Oliver, typically we see people just piling into calls, going into earnings.
Hey,
on
Mohammed.
some of these names. Put volumes about
I didn't
6
do
times
great.
normal
Market was
daily
pretty
average
choppy.
volume. Almost the same volume
Trading
on the
futures,
put
like
side. So
scalping
maybe
futures,
some
is
people setting up for some
just not as good as
downside risk too,
options.
but this
Better
trader's
for
looking for the stock to
overnight
rally after earnings.
short swing trades.
Know what to again? It's seems like
Go
it
back
has
20
a lot of
minutes and see what you
potential,
think.
But they didn't capitalize.
It
on
seems like the judge
COVID, everyone's staying at home.
confirmed the shareholders are getting zero.
You know, we've still got a lot
But
of the users. So
I'm sure that will be perceived as FUD, so I don't know.
The fact that it's
If he confirmed anything else, then the stock would have ripped.
what, like 12 years?
He said shareholders are getting something. Would have gone the other way.
Traded company, only 5,
Oh.
but I mean, it's been around for a decade.
Yeah.
And how are they just now figuring out? They're like, oh, it'd be great if people could buy stuff.
2110, you're getting your first
It'd
green
be
candle.
great if people could use the advertisements. They gain some market share there, where you can actually. Amazon's going to take a bit of.
I mean, yeah, it's always
revenue,
all of the
But
news
Pinterest
has
gonna
been
open up
awful.
their
Let's
platform to even
cause
more
it
users
to drop.
that actually might
So
want to buy it instead of just looking and browsing.
I just don't get why
I mean, nothing's changed here. This is
Well, it's almost
bad
like,
news and
hey, look
dropped.
at
So
Snapchat has how many millions of users?
to explain why it's ever rallied back up,
But I can't really think of a way
I don't know.
for
Here you go.
Snap to
It's doing it again.
monetize other than ads. Pinterest is like, hey, let's buy all the stuff that's on here. Duh.
To me, I just keeping it simple with TA.
They have the partnership with Amazon now.
All right. Also, why maybe the stock's at $28 instead of 90.
Catalyst was the court hearing.
They show in earnings that they're really, you know, breaking ground on the profitability side. Seems like a company that's got a lot of potential, and We know it's traded 90 bucks before.
Yeah.
It's at 1-year highs right now, but it's been pretty sluggish and slow in its rally over the last 6 months. Thanks, Tom. Good trade.
I still need over 30 cents.
Let's talk
So
some
I want
science.
to buy back in for whatever
The
reason.
latest on the superconductor craze, if you can call the 24-hour
This is
shake-up on a discovery
similar to how Hertz traded,
superconductors a
but it wasn't on
craze,
OTC when it was
but
having crazy swings.
renewed here
It'd have
with
also
American
swings to the upside, not just downside.
64%.
They were bigger. They were like 100%, 200%, 300%. I think it was crazy. There you go, getting a rip rally. Only down 9%, 9.7 now. If you did want to sell, but you held, these dip buyers give you a nice gift. They gave it to me good last time when we had this dip. I held through, expecting dip buyers, and was able to sell up here. Not sure how much of a rebound you're going to get, but I would look at I don't know, maybe that 25 cents, if you can hit there. They just posted on TikTok? I doubt the Bed Bath & Beyond has a TikTok that they're posting on. I think you're seeing something else. You're seeing someone representing Bed Bath on TikTok. Made it all the way back up to VWAP. There's your gift. We're stuck about the rights to it. No. Share it on media. Let me see it. Dude, are companies having TikToks? Like legit companies? Maybe you're right. I didn't know TikTok was that legit. To have like check marks and legit companies. I am old. Wow. Is this what you're talking about? That is so loud. Last post I see was 3 hours ago. Only down 6.5%. Merely a flesh wound. It didn't change anything, Cameron, that's the thing. Like, they can say whatever they want in court. You ask those guys, what would make them not bullish? There's no answer for that. So, no matter what the court says, no matter what the judge says, there is no answer. Until this is over, it's not over for some. Like, until it's literally over. And that is true, I think. I mean, you still have potential. Like, there's still potential. It has not fully concluded. Until this isn't trading anymore, there's still potential for something. So, there you go. Back up 27 cents. Only down 4% now. The dip got bought. But are we no longer downtrend now? That are we still in this downtrend rather? I would say so. Not until we break some highs are we going to continue to see a downtrend. Especially now that that support broke through. Thanks Agwell, for your insight on Tune. We'll keep an eye on it. I don't know why it's so personal to you if we buy the stock. Don't take it personal if I don't buy into it. If it can hold up above that breakout, that would be pretty legit. I would be surprised. It's basically where it was trading before the court is where it would need to hold. So like right up here somewhere. Weeble messes it up in a change time frame, so can't get my stops that time. This is about the dip. We're so back, baby. Why down 1.5%? Another dip gets bought. I wonder how we're the judges of the ticker. Almost back above that support. That's crazy. That's nice of you, Fire Marshal. Feed him little crumbs every now and then. There you go. Dip was bought up. The judge bought it. He did. He just set that all up, huh? Well, again, if you were concerned, you've potentially been given a gift here that's rallied all the way back up. Give you an opportunity to close. Last time we had the big dip where it broke support was here. Rallied all the way back up, traded flat, and then it's continued its downtrend. Well, potentially, I mean, this could turn around tomorrow. You know, I could keep rallying up this week. The trend it's in now, though, is not your friend if you're long. Anyways, BBBYQ settled down a little bit. It was so coordinated. Someone bought the dip on GameStop. That was a weird dump today. 10 minutes Fugazi hitting. SPY rallying up. Have an ugly day for trading, really, on the SPY. Next down 7.5. Come on. Doc bouncing off that 38.2. Literally to the penny. Look at that. 27.52. That's crazy. Right back up to VWAP. Zim is flat on the day. And you get out of some of these. You got a Zoom, you got a Rad. Got a neg now. Or it's best not to trade on emotions at all, lords. Alright, barbecue moved back down to VWAP. It's down 5.5. Nickel's holding up pretty well. MSGM back to VWAP. Proterra holding up really well. I'd like to get some Proterra. Get some more of it. What did Mullen do? Mullen had a nice little bounce there. Still respecting that inverse head and shoulders. Cost is up 1.5. Is TUP or his earnings after hours? I'm curious how this plays out. Yellow joined meme stock club with Rally. We joined the bot pump. Overshadowing big movers like this one, SDC. What is that line? Got moved, I think. Oh, that's just that little short-term one. Look at that move on SDC. Huge. Huge rip into earnings. Can't Teladoc continue. Keep going. Five-minute finger slap. Coming in hot. Thanks, guys, for your support. Hopefully you didn't get crushed too bad. Yeah. There you have it. 2680. It's down 4.7. Might be setting up just a horizontal channel here. Potentially. I don't like that it broke that support though. So I'll wait. I'll wait for a break. Something like this. Tell me they'd sell. They had a court hearing, and yeah, you can go back and listen to it. Make up your own decision on it. Judge, I think he confirmed shareholders are getting 0. But maybe that's not what he was saying. But it really doesn't change anything for people that are still in it. Judge can say whatever he wants, and you're in it at this point. It's just based on Fugazi. That everything's fake and not what it seems, and that there's going to be a stalking horse bidder or something at some point. So Whatever he says doesn't really matter. The more he says that's bad, the better for you, because you can buy the dips, which got bought really well today. Another one. It's end of the day down 8.4, back to VWAP. RC buying Shell for Knowles theory still exists. Yeah, I mean, all of it could still happen. None of it means that shareholders are going to get anything, though, as far as my understanding of it. So, sure, the name brand lives on. I mean, it's already flourishing and with overstock. Has nothing to do with this ticker, though. This ticker, whatever flourishing it's doing, is because of retail, I think. TUP after hours, I gotta see. It's tomorrow. Wait, is that not confirmed? Yeah, they haven't confirmed. NASDAQ still says it's estimated to be tomorrow. They haven't, I don't think they've submitted a filing on when they're gonna have their earnings. That's not good. These stores are still paying borrow fees. But why aren't they paying them to you? Why aren't you lending your shares out? You're just letting your broker capitalize on you holding shares. I don't think we're gonna get a bell. I think I've successfully turned everything off. Nope, no bell. There you have it, guys. Chop City on SPY today. Really building up some liquidity in this area. I still think we're coming down. So, let's see. Patterns. I mean, not a whole lot. You've got like little weird ones here and there, but it's really just kind of consolidating overall. Yeah, not much direction. Engulfing candle still there. MACD flip bearish. Hasn't been able to break out of the high of that, so that's all pretty bearish. Break the high, that'll change at this point. The next 2 months also, August and September, are historically red months for the market as well, if that means anything to you. House base is 94 cents. Still might get a chance. Barbecue came down a bit. It's down 7%. Down 20 something at some point after that court hearing. It did break the support that it established since OTC. That 4 cents that then we tested here. Tested at 17 cents. Kind of tested here at 22. The last court hearing that had a big dip, we tested it then. And then this time we broke below it. So I'm out of the rest, and I will probably not be getting back in it unless we do break some resistances to the upside. It's not looking good. RSTA, got your head and shoulders, and today it broke through the neckline. So the downtrend is still intact. Could have gone either way. Could have broken to the upside, but it didn't. Broke to the downside. GME came down too. Kind of a weird little sell-off intraday with volume. Not sure what that was. I don't know if we'll see news. I didn't see any filings earlier. Oh, is it about, let's see, sites. GameStop to drop crypto wallets. Oh, that's what it's from. It's that news. Crypto wallets due to regulatory uncertainty. So that could be true. People are wondering why they're getting rid of their wallets. Regulatory uncertainty. I'd say that's probably what that dump was from. Yeah, I think that's what that was from. It's down 3%. We've been bearish on this thing since it broke this support right here, and it has continued to come down and use that as resistance. I think it'll probably continue to come down until potentially this support or 20 bucks or so, and see if it flushes through there or we keep coming down. The cup and handle has failed. And now we just have supports and resistances. Broke through that support. And one more support down here, and then you just have horizontals. 18, 15, 10. 10 from back here. TUP are still making moves. I don't know if they have earnings tomorrow. Nasdaq says it's estimated, so I think they can just release them whenever they want. We saw that with, what was that? Was it Overstock? We saw it with some company. They just released it like impromptu. So that's kind of interesting. Some of our other plays like NEG are down 8%. Not sure if I like this chart or not. Sometimes I like it, sometimes I don't. It's still kind of in an uptrend, but it's going too slow. RAD looks nice, but it's never really had hasn't really had a move. Although today is not bad, 5.25%. That ain't bad, and some volume on there. So I'll take that. I like RAD for maybe some leaps. This thing has very low valuation, I think. It could have a potential for some big spikes in the future. 96 million market caps with 5 billion in revenue a quarter, losing 248 million a quarter. So they're probably loaded with that in the dying industry, but you know, doesn't mean you can have big potential for volatility in the future, given it's trading at like 1994 prices or something. 1980 prices, never mind. Yeah, it's close to IPO. So I do have orders to get some leaps on it. Still haven't filled. I'm gonna be greedy on them. Anyways, Zoom we have broke out of this resistance line. Still has one more larger one up here. Hopefully that works out. I got more Teladoc calls today. Nice bull flag here on this breakout of this resistance. This accumulation period's been going on for about a year, so this might have a longer term uptrend. I just have September on it, but we'll see. Got Zim, more Zim calls today, or back into Zim. I like this one. Hopefully it has a little pre-earnings run up. Has a gap to fill up here to complete this cup. I will be probably closing this before earnings if I'm up on it. Looked at Teladoc, looked at Zim. And then Dish. Dish is down too. Still in a nice uptrend though. Have some leaps on this thing now. These are leaps. What are these? Yeah, not really leaps. They're January calls. Did close my shares of Dish today to pick up PTRA. This one I like. Break out of this resistance here. You can see clearly defined. Been a nice uptrend. Has a gap to fill up there at 2.4. And next real resistance isn't until like 340. So I'll put more into here as I'm able to. Still have Mullen double bottom there, which was nice. It didn't break below there. Still has this inverse head and shoulders and a break of that resistance that oh shoot, yeah, that was the one right there. I just moved that one somewhere around there. So broke that as well as set up this inverse head and shoulders. So I like it up to this resistance at least, 1408, and who knows, this thing's pretty volatile. And then cost, we still have costs up 2% today. A little swing trade with the shares. Has a nice looking chart. Like the uptrend it's in. It's holding above that 9 moving average. But yeah. Thanks, Psych You Up. Hope is a great thing. Hold on to the night, hold on memories. I don't even know that song. Step on them 542 TUP. Scaparonis. Looking forward guidance. Thanks, Don Claddy. I don't know who you are, but appreciate you joining. Thanks, A. Thanks, Bubblicious. Thanks, Psych. Thanks, Kitty Daddy. Thanks, Cameron. Thanks, Lords. Thanks, Poison. Thanks, Busy B. Thanks, Fire Marshal Bill and Trays. Thanks, Mohammed. Thanks for the support today, guys. What did we land on? 37 likes. Kind of crappy for how many viewers we had with the court hearings. Those barbecue court hearers, they're a bunch of moochers. They just come in and watch, don't even thumbs up, don't talk, and just leave. I don't know about this community. Okay, we'll see you on Discord. Put it on. Maybe. See you on Discord, see you on Twitter. See you in Valhalla. Peace out, guys.